Good morning, good day, or good evening. Welcome to InvestorExpos show for January 23rd. Today we have a great lineup for you of 4 speakers: TJ Watkins, Michael Valtos, David Morgan, and Jane Gallina.
Well, hello everybody. Let me know. Let's see, I got all the questions up here. If you want to give me a little yes or a check or anything like that, make sure everybody is operating. Otherwise, I'll just kind of keep going. Great, thanks. Thanks guys, got that going. But yeah, a little intro there. My name is TJ Watkins. I am with Simpler Trading, and this is the Moxie method, how to generate 10 to 200% returns, even if you're new to trading. So just something I like to kind of put that out there in the beginning. This is an actual screenshot of my Roth IRA, and you could see that started out $67,000 back here April 2018, and by May 2019 I got it up to 125,000. That's 86% gain. And then I had to take a little screenshot here because at the time the invoice wasn't in, but there you go, 136,000. That's about 103%. So I got 103% gain in a Roth IRA account using just stocks in about 13 months. So just kind of want to put it out there and tell you that I walk the walk. And what you'll discover tonight is how I reliably generate 10 to 200% gains in just minutes a day on what I call Moxie trades, and how I target powerful short-term pops and drops for extraordinary results, and how I get in the right stocks at the right time. And of course, we seek to avoid these bad trades. Now, my secret for precise stock trades is that I'm able to kind of look beyond price. You don't need to be a stock picking pro to do this. You can target powerful pops and drops with a checklist that I've created, and that really has helped me trade the way I trade. And I also talk about pops and drops because we all want to make money, and we make money with the ups, the pops. We want to see price really go up there and do well, but the drops, they can be just as important because we have to avoid them. And this is the hourly time frame of the S&P. And what you can see here is this is what I call an inverted trampoline move. I'll just kind of get into it here a little bit more later. But basically, when the Moxie indicator is below 0, but price is above the hourly 50, that's an inverted trampoline move. And you can see the results of it is this big old move down. You can also see we had the Moxie price trigger as far as an exit goes. And then you can see it's the same situation. We got our Moxie price trigger, and then we've had price over the hourly 50 while the Moxie indicator is below 0. And again, you can see the good or disastrous results that come after that. Depends if you're long or if you're short. That's why if you're going to be trading stuff, it's always good to have a stop. You never know what's going to be happening. And despite the best indicators, boy, some stuff like this can just come out of nowhere. But fortunately, part of what I'm talking about and what I do is we're able to see this stuff coming. And I thought this was 2 pretty good examples about it recently. Now, I'm able to see past price, as I said earlier, to what's really going on inside. Through my analysis of the data, I'm able to consistently see when a stock is likely to pop or drop. And the method I develop routinely finds stocks that can move 10, 20, or even 200%. And yes, I will get to that one towards the end of the presentation. My method has allowed me to grow my account to a little over 103% in just about a year. Now, how I catch these big moves is like this. I like to get into the right stocks at the right time. And of course, time is always important because, we could get into a stock that does work, but maybe it doesn't work right now. And it kind of puts us through the ringer in a lot of heat. So timing is very important. And what you can see here, this was the ticker INMD. And in fact, we're still trading it. But you can see here, we had the Moxie price trigger, which is the green arrow. And then you can see the line where I said that I got in and price coming into the hourly 50, and then it just keeps going. This is also a trampoline move that I talk about. And then my rules and my checklist tell me to get out right about there. And you can see, good thing I did, because, well, next thing it did is it imploded on itself. But that was about 100% gain in a little over a month, or about a month. And that's the kind of stuff that I'm looking for. So it's not impossible. They're out there. And you'll see how it's possible to, again, trade these kind of things. I don't sit at the computer all day. In fact, I say it just takes minutes a day because I'm an end of day trader. I kind of figured out what my routine was and what I needed to do and what worked for me. These principles, though, that I have can apply to just about anything. If you're a weekly trader, or if you're a 2-minute trader, intraday, daily, whatever, something like that. But for me, I wanted to kind of slow down a little bit. I didn't want to be tied up at my computer all day. And I found out that for me, trading at the end of the day and doing a daily trade was the best. And so you can see here that I'm looking at stuff that ends up at the end of the day. We got our Moxie price trigger, and then you can see the price came into the 50 and then just started to shoot up. And this was PDD, 17% so far on this one. And that was pretty great. You can see where it came in on this one. Price started to go level, Moxie indicator started going up, and that was the clue that this thing was starting to take off, and that's how it works for us. Now, here's a little snapshot of all the accounts that I manage, going all the way back to July 2017, started keeping track of it, about 120,000. July 2018, had a pretty good time, 203,000. And then July 2019, 517,000. So, not too bad. And again, this is all just stocks, no options. And of course, what we're trying to do here is we want to see our account grow from the lower left to the upper right. We want to be able to see strong returns year after year without being a stock picking pro. And the objective of any trader is to get the net liquidity of our account to go from the bottom left to the upper right. So, that's what we're trying to do. Not to say there won't be any drawdowns. You can see this at the end of 2018, of course. And then there will be times where they're slow, but they pop up, and overall the account keeps growing, and that's what you're looking for. And then you get some of these nice ones like that when you get those 100% movers in a month or so. So they're out there. They're pretty nice. Part of my path, my dad introduced me to the stock market as a kid, and I didn't really know anything about it, but I was exposed to it and knew it was important. And you can see this is my dad and I are both pilots, which it was important to me because it kind of told me a little bit more about what I needed to know. When I started getting into this, I was about 12. He actually took me to my first stock trading seminar, and at one point I asked if trading for income was really possible. Was this something that I could really do? Could other people do it? And the instructor at the time up there, very much in a room like this, said that, well, of course, no one was born knowing how to trade. And that was really one of the most important things that really kind of kept me going as I was going through my trading career, and kind of the ups and the downs. Is like, okay, nobody's born knowing how to do this. That means it's learnable and it's teachable. And so I can figure this out, and there's an answer to it somewhere. And so again, going back to my interest, kind of shaping my trading style, I graduated from Arizona State University with a degree in manufacturing engineering. So I'm very much of a mechanical engineer. That's how my brain works. I need to see kind of the black and white, nuts and bolts type thing. And so I took that and I kind of sidestepped, and I went into the financial advising with New York Life, and I got my Series 6 and 63, and I wanted to help people make money and help them retire and grow and all that kind of stuff. But then I kind of realized that that wasn't quite for me, so I sidestepped and actually went into stocks. Now, as I said earlier, I am a pilot, and that's instilled a lot of discipline in me, because if you are reckless and you don't follow your checklist, well, you're gonna kill your account. You're gonna kind of blow that thing up. You need to know what your rules are, where you're going with this stuff, and if you don't have that process, then again, it's going to be very difficult. And the background I have as a pilot, I believe, is very good about that. So there are a lot of similarities as being a pilot and with trading. You used to talk about the checklist, the process. So the checklist basically means you have an order of events, and you have to make sure the landing gear is down before you land. You want to make sure that the flaps are down. And you have to do all these other things before you can actually land, or vice versa, take off. And the same thing goes to when you're trying to get into a trade. You want to make sure that it's maybe over certain moving averages before you get in, as opposed to under. You want to make sure that, well, is it in an upslope as opposed to a downslope? Are you trying to buy the dip, but really you're buying a falling knife? All those kind of things. And then you have to have a set of rules that works for you. What kind of trade are you kind of trying to do? What kind of trader are you? And what are you trying to accomplish? And so these rules, you need to know what they are so that you can then have the checklist to follow them. And then discipline. None of these things, like the checklist and the rules, really make any difference. They don't matter if you don't have the discipline to stick to it. It all goes out the window at that point. And so all of these things are vital to keep the plane and your account from crashing and burning. So part of why I love the trading lifestyle is because 5 days after my 33rd birthday, I moved from Arizona, which is where I was born and raised, to Denver, Colorado. Of course, here's me reading Trading in the Zone and the beautiful patio that I had up there. And then I went out there and just started having fun, living life, going kayaking and whitewater rafting. And then I bought some skis, and I learned how to ski for the time. But now I live in Austin, Texas, working with Simpler Trading. and my skis are getting a little rusty in the closet, so I got to figure out something to do about that. But I can move around and do all the things I want to do. Just like I told Anna that I was in Cabo over the weekend. So kind of forgetting the 9 to 5 grind. This is my family up in Washington. In fact, I was up there for 2 weeks this last Christmas. This was the summer before. My sister just had her first daughter. I think she's coming up on 2 years old. She's a little older, but yeah, I like going up there, just kind of spending time. I've got another set of computers at my parents' house, and I can be up there for weeks at a time, doing everything I'm doing right now. Doesn't matter where I am. And I think that's kind of what a lot of us want to be able to do, is spend time with those we love and the family around us. But what if you don't have an edge? It's hard to grow your account, and trust me, I've figured this out too. And it's, if you can't find the right trades, we can always see that there's stuff happening. There are lots of trades happening all the time. We just need to figure out how to catch them. And when I was starting out trading, it was very, very frustrating to see everything moving, to know that there were these trades, but I just couldn't catch them. I just didn't know where to find them. They'd happened before my eyes, and it was very frustrating because I was missing out or getting in too late with them. And so I took the big leap. And the struggle that I faced when I made the big leap was finally deciding to leave corporate finance with New York Life. And at that time, I could have gone into aviation, I could have gone into engineering, both things that I do like. But I decided to go into trading because of the freedom and the ability to leverage my time, as kind of I'm explaining, that I got to go Cabo, and I had the market open on Friday, but I was still trading. I spent years studying the squiggly lines that made no sense to my brain or to my eyes, again, going back to the kind of the engineering thing, and I just couldn't consistently find why price moved. I always get a kick out of this one, but this was really like one of my mentors that I learned from. This was a screenshot of one of his trading screen, and I swear I can't tell what is going on in here. I can't even see price. I don't know what's happening. But you know what? Hey, you got to do what works for you. He was a very wealthy person, and he made a lot of money, and he was teaching people, and he was successful. So, it worked for him, but it didn't work for me. And I think that's something that we all kind of need to figure out. We all need to find our path about that. And so I like my charts nice and clean, but this one always gets me a little kick because I'm like, man, I don't know how he does it. So one thing that I was trying to figure out to do is just kind of learn and decide and figure out how price moved. And what I was looking at is, okay, if I started adding moving average, why did this one with price go through this moving average to the downside? And why did this stock go up through that moving average? And I was just thinking, like, if I could figure out which way this is going to go, it's not that one trade is better or worse than the other, but if I had known this was going to go down, I could have shorted it. Or if I knew this one was going to go long, I could have bought it. And that's all I'm trying to say, is that we just need to know which way it's going to go so that we can set up what kind of trade we want to take. And so another thing that I kept having was that I'd be able to get in at a good point and it would start to move up, but then the bottom would fall out and I'd give it all right back. And again, going back to that moving average situation, like with this purple line, like, again, why didn't it bounce off this? Why did it go down? And I'm right back to ground zero. Maybe I didn't lose any money, but all that time that I put into this, and I just give it all back. And it just was so frustrating. And then even this one, the other worst thing that I deal with is treading water. And I kept picking stocks that were basically just going nowhere. Maybe you'd buy here and, okay, this is good. And then the bottom would fall out. And you're like, okay, well, maybe I'll hang in there and, kind of keep doing this. Or maybe you'd buy at the top and it'd go down. So you'd sell. And then it'd come right back up. So you'd buy there and go back down again. And you just kept losing money that way, just absolutely churning your account. So I've got some little tips and tricks and ways to help figure out what we're dealing with and to make sure that we don't get stuck in something like that. Now this one, the biggest one, let me know if any of you guys have ever dealt with this. Like, again, on the chat room, like, give me a why if you've seen this, but you ever had something like looked like it was doing just fine, it was going along, trucking along just fine, coming into this moving average, starting to go up, and then the bottom absolutely falls out. This, I've had to deal with this time and again, especially in the beginning, not so much lately because I've got a way to pretty much avoid something like this. So that's kind of one of the things I'd like to be able to talk about and teach you all. But this is some of the stuff that I think us as traders just have to deal with. Yeah, that's right. I'm getting people like, yep, been there, done that. So that's, again, I've been doing this for a long time, trying to figure out what those little bits and pieces are to help avoid situations like that. And I think I've kind of come up with a few answers. And so trial and a lot of error. my process was basically slow death by 1,000 small losses. And of course, we got to be honest, there's a lot of large losses in there too. But when I began, I kept dwindling my account little bit by little bit by little bit. It was very disheartening, so to speak. And I tried just about everything, I really did. I was following some mentors and stuff, and it just wasn't quite working for my brain. I just couldn't find that simple, objective way to make profitable trades, partly because some of the people I was following had those really, really messy charts, and then others were kind of like the Bob Ross of trading, like, oh, just paint these happy trees or look at the stock go this way, and it just didn't work for me. I needed something a little bit more concrete, a little bit more mathematical, or just something a little bit more cut and dry. And so if you guys remember that last slide that I had where price was coming into the moving average and went down, or came into that moving average and went up, what I was trying to do is go back and reverse engineer all these big moves to these stocks and figure out what I could figure out before they actually moved. This was the engineer in me trying to, reverse engineer and figure these answers out. And one of the biggest things that I learned was adding another time frame. And so what I did, let's say this is the daily time frame. So what I would do is I actually added the hourly time frame. And so as price started coming into, say, this moving average right here, I'd be looking at the lower time frame and say, well, what else can I see? And what I could see was, notice how price generally could not get over the other moving averages. And then also notice that the Moxie indicator here was below 0, and that was telling me that this thing really didn't want to go up, that everything it was telling me was wanting to go down and down and down. And that way I could see before it got to this moving average that it was going to keep going down. Now, what about the other one? As price started coming into this moving average, I could see over here that there was a bit of a level. And then I could also see with the Moxie indicator that it was starting to push up and tell me that there was some upward pressure coming into it. And then right where price started to bounce off that moving average here, I noticed that on the lower time frame, price started to scoop up by the lower time frame moving averages. And I also got a Moxie price trigger, and then it started to go. And these were the little facets, these were the answers that I started putting together and learning what was really happening and what I could do about it. And I could actually get a little bit more insight before something happened. And so what didn't work for me, going back to all that squiggly line and that mentor that I had, was this. I mean, literally this. I can't see what's happening with price. There's too much junk on there. I just couldn't tell what's going on. There are too many colors. I can't see where the moving averages are. And then, we're probably thinking like, well, if one indicator is good, well, why not add 3 or 4 more? And then you get into analysis paralysis. And, all these things are squiggly lines. They're just all a variation of squiggly lines. And it just didn't really work for me. And I couldn't figure out what to do with it. And it was that there was just not enough precision for me. So I needed to find out what didn't work for me so that I could take what did and start to compile it into an indicator and a method with the rules and the checklists that I had. And so if anybody's familiar with the Matrix, it's a movie basically where you're inside of a computer program, basically. And those who can't see it, they basically just see what's on the left side of the screen, which is just a bunch of computer code, letters, numbers, whatever. This is what the world looks like, and they can't see it. I swear this is what stock trading and stocks looked like to me in the beginning. I'm like, how am I supposed to make any kind of sense of this and what's going on? Well, over time and in the movie, there was a special character who had the ability to actually read the Matrix. And so what he could do is take all these letters and numbers and code and actually turn it into a vision and see things, actually see the people and see the characters in it. And I feel like after enough years and actually starting to determine the patterns that were out there, I started to be able to see that. I could decode the squiggly lines of the stock market and I could actually start reading the Matrix. So that's what I'm trying to convey to you guys, is that I can kind of help you see some of this stuff. And once you see it, you can't unsee it because you're like, oh, now I start to see these patterns all over the place. And so what I had discovered is I had built myself a reliable method for knowing when a stock was likely to pop or drop. And remember, knowing when a stock is going to drop can be just as important, if not more important, than knowing when the stock is going to pop, because you really want to keep that money. And this allowed me to leverage that reliability. Again, the reliability, if you can count on something that's going to happen, say 80% of the time, then you can put some serious money on it. And I was able to do this with minimal risk and minimal time because I'm an end of day trader. Now, going back to the whole checklist thing, does anybody know, did you know, or if I have any other pilots out there in the room right now, that the checklist actually had to be invented? I mean, I think we kind of think about checklists and it's kind of just always been there. We really actually had to invent it, and it happened in the early 1930s when Boeing was developing the B-17 Flying Fortress, and they had the test model out there, and they had some really expert pilots who were taking off, and they crashed on takeoff, and it killed everybody on board. I think it was 3 or 4 people on there. And what happened when they figured it out was that there was a real simple little something that they had forgotten to do, some little latch that kept the controls from moving if it was windy outside. And they had realized that despite how smart or how good a pilot is or how a person is, that airplanes had just started to get too complicated for them to remember every single step before, during, and after a flight to really, to be safe. And so they had to invent the checklist. And so I thought, okay, let me take my pilot background and let's do the same thing. And so this is one of the early checklists that I had developed for myself when it came to trading, because trading can be relatively simple, just go long, go short, whatever, ride the trend. But there are a couple things in the way that you have to make sure that you do before you actually put on a trade. And so I thought, let's make a trading checklist. And so I set out to build that trading checklist. And from all the data I gathered, just a lot of time, a lot of experience. And of course, the pilot in me felt right at home. And at that point, I began to catch lucrative trades more consistently, like this one. This is mRNA. Yeah, I also don't like to trade earnings, so I wait till after earnings. But you can see here's the Moxie price trigger. Here's what I call a trampoline move. Kind of get into that later. And then this is where I go in when price finally finds support at that moving average. And you see it goes along the moving average just fine. Then you can see it breaks the moving average and we get a Moxie price trigger to the downside, to the exit. And that's when I get out. 33% gain right there. And that's the kind of stuff I'm looking for. And that's my process. And I was finally able to see opportunities to make money where others didn't. Now, this is an old one. NEO has since kind of come back, but this one I like because I actually traded this one. But you can see right here where I'm getting into the trade, price gets over that moving average, then you get the Moxie price trigger, and then this thing just shoots up, like literally goes straight up. And it was a very, very good trade for me. 33% trade in just a few days. Now my Moxie rules, my checklist, I have it for the exit as well, told me that I should be getting out right there, and I did. So you can see here a little bit, tell me what to do. And of course, they don't all go right. Now this one was Goose. My checklist helps me know when to get out if things don't work out, and we need to know how to keep losses manageable. It's very important, and keeping losses small helps me to grow my account. Now you can see on this one, I got my Moxie price trigger and I was looking for price to follow that moving average and do that. Well, I had my stop, it didn't hold the moving average, and so I got out. I think it was about a 3% loss, whatever. You move on. But what's important is that you keep taking a swing if you see something set up again. Just because you made the wrong entry once doesn't mean you'll make it again, or just because it wasn't ready once doesn't mean it's not trying to get ready. And so I kept my eye on Goose, and you can see what it did is it came down to a double bottom. I got positive divergence for the Moxie indicator. I got another fire signal. I got price over the moving average, so I went back in. Now, at the time I took the screenshot, it was up 6%. Ultimately, it went up here to the daily 200 SMA right there, and it turned into a 12% gain. So I had a quick little 3% loss, and I turned it around into a 12% gain just within a few days of this whole thing, because I could see the trade coming. And again, they don't all work out. Losses are really just the cost of running a business, and that's exactly what we're doing. You got to think of it like inventory, utilities, and employees. It's just a cost of doing business. But those losses must be controlled just like expenses. I mean, you can't pay everybody, a ton of money. You can't just keep a whole bunch of inventory in there. And so this one, as you can see, I got in right there, and then I promptly got out because it just turned around on me and didn't work. Not too bad, small 1.5% loss, but it's just the name of the game. Cashing in and knowing when to take your money. So with this one, Yeti, you can see here, got in right there as price is over the moving average. Then we got the Moxie price trigger. Now, typically, as I said, I don't like to trade earnings. This was kind of a special occasion, but it worked out. And then I took my money and ran. And you could see that not too long after, I got the Moxie price trigger to the downside, or at least to an exit. So that's where I just took my money, said thank you, walk away, wait for another trade. SurveyMonkey, here's another example. Here on this chart, price was over the moving average. On this chart, you can see price was over the moving average. Then I got the Moxie price trigger, and then continued. And then this is where I got out, and then this is where we got the Moxie price trigger for the exit, and that's one trade. And kind of the idea of knowing when to take the trade and walk away, that's fine. That was one trade because we don't know what's going to happen next. we have to wait for something new to come along to see if we then want to get in and actually take that next trade. So here's another example, and this kind of goes onto what I was saying about you got to know when to take your trade, and don't be too upset about if you miss something later, because you can see here, got our little double bottom. Here's your positive divergence right there. Here's our Moxie price trigger, and then this is where I got in when price was flagging into the moving average, and then it bounced off the moving average, and then it started to really take off right there. So my rules, my checklist told me to get out, and then you can see here that there was the Moxie price trigger for the exit. And now this one was only, what, 9.5%, okay, not too bad. And look what happened after that, the thing completely imploded. And that's why you just gotta say, thank you for the one trade, move on and see if it sets up again. Here's another example, MDB. Now it's since moving around. In fact, I'm actually getting into MDB soon, now that it's been a little while, but I wait till after earnings. It was the day after earnings. You can see it took a little dip. I already had the Moxie price trigger, and so I got in right here, and it took off. It really took off. It did pretty well. Now I was expecting a little bit more. You can see I waited till price ran into the moving average, and then when it couldn't hold the moving average and I got that Moxie price trigger, I got out for about 12% gain, and that's all that this thing had. And that's sometimes all you got to do for right there. Now Okta, this was another pretty good one. Little confusing here with the choppiness, but generally you could see that the Moxie indicator was trending up, even though price was trending flat. And you could see here, kind of going back to what I was saying earlier, like if you know that what price is going to do, you can see price coming into this moving average. Is it going to lift? Well, you see the Moxie price trigger right there, and price flagging into the moving average, so you get in. And then my rules said, okay, you should probably take a little off right there. So I took my first exit. This is what I call a trampoline move. If you guys, sign up, you can figure out what those things are. And then I get out for my second exit and say, good, thank you. And then a little bit later, you can see we got the Moxie price triggered to the downside or to the exit. And I said, that was a darn good trade. That's all I needed. We got 22% and almost 14% on that one. Now, I kind of like talking about this. My mom loves it because, I talk about my mom. But word started to spread about my Moxie stocks, and my account began to grow. Of course, my friends and family heard about my success. My family heard about the numbers. My friends just heard that I was having a good time and that I wasn't kicking the dirt anymore. But my mom's like, well, I got $6,000 just kind of sitting in an account. Do you want to do something with it? And I was kind of nervous, and thought, okay, I'm doing this. I can do this. If I can take my mom's money, and if anything goes wrong, she's my mom. She'll probably still love me, hopefully. But you can see here we started about $5,700, and this was April 2018, something like that. And this was also during the time that I had one of my best Moxie stocks. If you guys remember back in the kind of the earlier days, cannabis, IGC, they've since had some issues, but boy, when you catch something right, it really works out. Now, this one stock didn't take my mom's account from 6,000 to 20,000, although it really, really helped. I mean, it definitely got it up there. But I was able to really follow my rules, and that's what helped get everything going. Excuse me a second. Got a frog in my throat there. All right, so we got the Moxie price trigger, if I can draw that better, right there. Moxie price trigger, so I got in. And then promptly, I think within a day or two of me getting in, this thing collapsed 50%. Because you can see this thing is only like $1 to $3. So it went down 50%. I'm thinking, oh, great. I totally just ruined this one. And it's really uncomfortable. But I had to stick to my guns and say, look, I've seen this before. It's still following the rules. Everything's okay. It's still above the moving averages. And when it finally started to pop up and trend again, I went more in. So that was my second entry at $2.90. Then this thing really started to crank. And when it started to pop up like this right here, I started taking a little bit off. So I took my first exit at 144%. Like, mind you, this is just stocks, no options. And then I just said, all right, let's go see where the rest of this thing goes. And then it took off and just went vertical. And this was insane. I mean, 257% on just a stock within a few, 2 weeks from the 21st to the 2nd. Insane. So I said, all right, let me take my second exit, which was the bulk of it, because, well, 257% on a stock is kind of rare. And so I said, let me see where maybe the rest of the quarter of the account will go. And so once this thing started to implode right here, I said, all right, you know what, just had a good time, let's just get out. So I cashed the rest of it in for 231%. And that is really what helped me get a lot a lot of gains in a few of my accounts, and for my mom's account, 6,000 on the way up to 20,000. Now, also at the time, my parents were remodeling their house up in Washington, and I said, hey, look what I did. Here's your 6,000 back. It's 20. Do you want to use that to help with your kitchen? And so sure enough, they did. But so I got the count up to 233%. That's 6,000 to 20,000. And I helped my mom, redo their kitchen and buy this nice marble or granite countertop, whatever that thing is. But that's what we do. That's what we're trying to figure out. What is our reason to be doing this? What are we pulling our hair out for? What are we getting gray hair for? What are we taking all this stress for? If we can figure out what our motivation is, it kind of helps us carry it through. I'm doing this for me, for my future family, for my parents, to help those around me. And so I was starting to get a lot of requests to help teach what I had discovered, or to actually have my friends say like, hey, if I give you money, can you trade it? And I was like, I don't know if I really want to do that, but what can I do to take what I've done and take it to the next level, to the next step? And what I figured was I should do something about this. How can I leverage my skill? I mean, we're stock traders, option traders, whatever. How do we leverage what we have? And so I thought about this, and I said, well, let's see, was there one? Yeah. So I thought about, well, what if I put it out into action? When you're trying to pick stocks on your own, it's very difficult, and I know that. I've been through all this stuff. I've been doing this for many, many years, and it's hard to figure out where the best opportunities are, which is why I wanted to show you how to take action on the right stocks at the right time, because timing is important. So I took action, and I created Moxie Trader. And so I've been doing this for a few years. I created the indicator, I created the business, I'm out there teaching, and now Moxie Trader is now with Simpler Trading, and I've been with them for about a year, and I love that I now have a bigger platform, and I have a lot of people following me, and I just get a lot of compliments for people who say, thanks for teaching me what you know and help guiding us into these stocks to help make money. I mean, it's really, just share a little moment here, but I actually had some lady say that she's a grandma and she is trying to actually grow her grandson's college account. And it's like, all right, so we got some real motivation. I understand kind of what's on the line here, and I'm trying to make sure that I'm helping people do what they want to do and accomplish things in life. And so for the first time here, I'm offering the instant Moxie Trader alerts, which is when I target opportunities that have these 10 to 200% profit potentials. And my goal is to help you enjoy precise stock trades without having to stare at the market all day or reinvent the wheel. Again, I'm an end-of-day trader, so I think this works very well for people who have a 9-to-5 job, or don't want to do this full-time, don't want to sit in front of the computer. And so Moxie Trader offers objective entries and exits from my hand-picked watch list, and each trade follows my rigorous checklist to avoid false signals as much as possible. So hopefully I've kind of shown you a few examples of how I do this and what we look for, and that you can see that I try and make this as mechanical as possible, not like Bob Ross, who can just turn a stick figure into an amazing work of trees, scenery, art. And so what you get when you sign up for the Moxie Trader Mastery is you get the Moxie Trader alerts and the market updates. I'm out there talking to everybody and telling them what's up. You get live trading question and answer session once a month. It's 2 hours, 3 hours, and that's where you can come in and you can talk to me, and you can talk to the other traders and ask questions, and I just love doing it. So it's actually where I get to know the people the most. And then you get the trade spreadsheet, so you know exactly what my current positions are and what trades I'm taking and what I've closed and my history and all that kind of stuff, and then you can follow along. And then you get the Moxie Trader Learning Center for understanding how to read my alerts. So I do have a bit of a lingo. I have certain patterns, I call them certain things. And then you can also go in there, I have a bunch of videos that kind of tell you from start to finish what to generally expect about my trading and the market in general. It's a good education segment. That's why we call it the Learning Center. And so this is the live trading schedule. You can see we've already made a pretty good dent in it for the last few months. The next one will be February 4th from 2 to 4 p.m. and we're in Austin, Texas, so it's Central Time. I believe that's right around the corner, actually. It's going to be a Tuesday, so it's always like the first Tuesday of the month. So if you guys want to come check this out, you can go to simplertrading.com/try. And Anna, if you want to put that in the chat block or something like that at some point, simplertrading.com/try. You can sign up for it, you can check it out, and then you get here 30-day trial for only $7, which means that if you sign up for this, you'll get there in time for the live Q&A thing that I do on, what was that, February 4th. It's going to be that Tuesday. Come check it out, say hi. You can see a little bit more about how I am, how I talk, what I show, just my education. And Wayne, I'm seeing that you're asking if you get the indicator and is it only for stocks? So there's another thing you can do. Let me actually kind of flip this over. Let me get to, yeah, so let me slide this over for you. There we go. So if you are interested in actually purchasing the indicator, you can come over here, and this is the full class that I have. It's a 5-hour class, soup to nuts. I mean, it's the whole thing. It's a live class. We have people in there, asking questions. I'm talking to them. We have 3 days of live trading that's been recorded, so it's like 9 hours of live trading. Again, like that Q&A thing that we have coming up. You get the indicator, and you get all the course notes, all the slides that I created. I mean, this is a big package of everything I know I've put into this. You get the scanner, all that kind of stuff. So this is simplertrading.com/stocks. So if you want to go check that out. And let's see, what was the other? And is this for only stocks? No, it is not. Mostly how I operate is that I just like to read charts. I tell you how the chart's going to move, how it's going to go. And I know that there are a lot of option traders that follow us at Simpler Trading. And so I get people who are taking my recommendations or taking what I do, taking the moves, the education I apply, and they trade options with it. Now, what you won't be seeing from me is I'm not going to be telling you, okay, we're going to do a butterfly or a call spread or debit spread or something like that. It's not really my forte. What I will do is I'll tell you, here's what I'm expecting from the stock. How is it going to move? When should we get out? All that kind of stuff. If you want to take some different trades based on that, if I see a long setup, and if you want to go sell some puts, then that's up to you. But I'm just a really good chartist. I like to read the charts very well and do all that. We're not on TradingView. That is something that we're kind of working on. We're really pretty much on Thinkorswim. I've had it on a couple other platforms, but really Thinkorswim is the best one. It's where I developed it, and it just works the best over there. And that's where we have most of our people. So, as I said, if you want to go check this out, it's going to be simplertrading.com/try. You get a 30-day free trial, or $7, sorry, 30-day trial for $7. And then let's see, simplertrading.com, if you want to check out the class and buy the indicator and actually pick up the scanner. Now, what I figured is I was going to have a little bit of time, and I thought that you guys might be interested in actually either asking some questions or kind of looking at some particular stocks that are going on. So until I get a little bit of an answer, I was thinking that we could look at Piton. Mike, it just depends. I like to communicate with people, so I send out alerts is kind of maybe a misnomer, but I send out a lot of messages. I like to communicate with everyone. The alerts just kind of depends on what's going on with the market. If there's not a lot going on, you won't see a lot of trades. If the market is going crazy and awesome like it is right now, I've got a lot of trades going, and I just tell people a lot of stuff that's happening. So it really just kind of depends on the market. Like right now, I personally have 11 trades going. I don't know if that's a lot for you. You don't have to take them all, but there are a lot of things doing very, very well with the market. So one thing here, this is Piton. Now what you'll notice, you see how there's a double bottom here on the hourly chart, and you see how I've got that positive divergence with the Moxie indicator. That is the crux of my trading and my teaching and how I work. I'm looking at that saying, where you got a double bottom with positive divergence, there's pressure coming into this. And then you can see I took a quick trade right here that was on the 15-minute time frame, and then I added to it when it got over the hourly 50. The Moxie indicator crossed through 0, and you can see this thing moved up for quite a while. Now, it has done a pullback, and this is what I then call a trampoline move, is when price is below the moving average, but the Moxie indicator is still above 0. I love these things. I love these trampoline moves. In fact, I'm trying to think, let's see, CME, I think was a recent one. This is why I call it a trampoline move. When price goes below the moving average like this, and the Moxie indicator stays above 0, that's a high pressure situation to the upside. You can see it's like you go down like this and you jump up. That's what I'm looking at. Actually, now that I'm thinking about SDC, does anybody know this ticker? Because this one, let me show you a couple things with this one. And this is, you guys are watching how I trade. This is exactly what I do, and this is kind of my education. So you can see, here's the Moxie price trigger. It's telling me that energy is now positive. And you can see that price was trying to get past the moving average here, but it was at least getting supported here. And then we have a trampoline move. That's when price is below the moving average, but the Moxie indicator is above 0. And you can see this is why I call it trampoline move, because what's it do? It just shoots straight up. It's great like that. And then, I kind of clean this up a little bit. And then what you can see is it gets a little too far away from the moving average. So what it does is it comes back down. Look at that, another trampoline move. When price dips below the moving average, but the Moxie indicator stays above 0, that's a trampoline move. And guys, I tell you, look, it's like you jump on the trampoline and then you shoot right back up. That's what I'm looking at. And so far, we're staying above the moving average on the hourly chart, and we're in it. You know, look, these lines that I have, that's what I have. CGC, anybody out there trading this one? You can see, let me kind of zoom in on a couple of these things. You can see I've been busy with this one. We got the Moxie price trigger on this chart. We've got the Moxie price trigger here and here. The whole time it was going up. And you can see I was kind of playing around with it in through here. And then I loaded up big right there. Maybe let me kind of clean that up a little bit. There, I loaded up right there. Price came sideways into the moving average. The Moxie indicator was positive, and up we go. These are the kind of things that I'm talking about. You can see I took a little bit off right there, and then I'm just waiting for this to run into the moving average and continue up like that because the Moxie indicator is above 0. And so far, let's see, I think this was like a 20% move in the course of 13 days. And there was a weekend in between there. So these are the kind of things that I'm looking at. Again, let me know if you have any. I got a few minutes left. Let me know if you guys have any questions that we're looking at with the general market. And let's see if there's another one. How about LYFT? This is one I just got into. So we're going to see if this one works out. But if you guys want to follow along and see how I'm doing with these things, this is what I'm talking about. Here's a trampoline move. When price dips below the moving average, but the Moxie indicator is above 0. And then look, we just had another trampoline move on this time frame right there. And that's why I got in, because it was a double trampoline move, and so I decided to get in there. Yes, Wayne, there is a scanner. So that is with if you purchase the indicator. So that's going to be the simplertrading.com/stocks. That's where you can get the class, you can get the indicator, you can get the scanner, all that kind of stuff. And yeah, I have a scanner for, actually I have a few scanners. I have a scanner for the Moxie price triggers to the upside and to the downside. And then I also have a scanner for these trampoline moves that I have. Let's see, that's kind of a vague question. How do I evaluate scanner output? Well, I have the parameters. Like for example, maybe I like to look at stuff that is over the monthly 10 SMA or the weekly or the weekly 50 SMA, just to make sure I'm in an uptrend. And then what I would do is say, if I'm scanning on the daily time frame, I'd say, okay, I want price to be over the daily 200 SMA perhaps, or I just want to know when price is below the 50, but the Moxie indicator is above 0. And so what it's going to do is it's going to show me something like this. And in this case, it's going to show me, like lift would show up on my scanner for what, 3, 4, 5, 6, 7 days. So that would show up on 7 days right there. Now, if I was scanning on, say, the hourly time frame, this would have shown up 1 day, because that looks like that's 1 day. And what I'd be scanning for is when price is below this moving average and the Moxie indicator is above 0. And so that's when I'd find it. And or I'd be scanning for these Moxie price triggers to get these onto my watch list. Yes, Mike, that is correct. You get all the scanners, you get the indicator, you get the class, you get the live trading. I mean, you get a lot of this stuff. Where did that thing go? Let's see, right here. Okay, that's the trial. I got a lot of screens up here. Okay, here we go. There we go. How's this? So it kind of redirects to something, but it's simplertrading.com/stocks. And that's where you can go and check it out. But yeah, we got a lot. You can see this is where the course breaks down, and yeah, it kind of tells you everything about it. There's a lot of information here, and I've gotten a lot of good feedback. I've just basically taken everything that I know, everything I've learned over the years, and I've just put it through here. If you want to just not even look at the class, you don't have to. You can just buy the indicator and the scanner with this. It's all, here you go. And then, yeah, watch the video and kind of figure out the rules that I have. And then if you didn't want to do that, you can sign up for the 30-day trial for $7 at simplertrading.com/try. And that's where you get my mastery right here, which is where I put out the alerts. I talk to people. I got my own little classroom, my online classroom. and that's where I can go in. We can all chat. I do keep the chat log up, so if you want to communicate with me, you can do that. And we have a forum. So I'm very open, I'm very available. I just want to make sure that I provide the best service for everybody, and we do pretty well.
Hey everyone, it's Mike from Order Flows, and welcome to today's presentation. I'll be talking about the building blocks of order flow, and I'm going to talk about especially the delta surge, which is a specific event that occurs in the order flow, and it occurs, daily, depending on, you could use it on very short time frames, 30 seconds, very, 1 minute chart, 5 minute chart, 15-minute chart. People always ask, hey, I'm a more of a long-term trader. I don't want to sit in front of the screen all day. Is there something that I could just use on a longer time frame? And the delta surge is something that you can use on a longer time frame. So, what I'll be talking about today is delta, imbalances, and point of control. I got to cover all three of those because to me, those are the building blocks of order flow, right? You have to know the basics of what you're looking at to put it together. And you have to know why they matter, what they mean, what goes into those numbers, and how to apply them. Now, before I begin, just understand, trading involves risk, right? I want you to come in into, the trading world, understanding that there's risk involved. It's not a sure thing, as much as we would love to have sure things in life. There's no sure thing in life except death and more taxes. So for those of you that are new to order flow and you want to learn more about order flow, I give away a copy of my book that I wrote, Trading Order Flow. It's 150 pages. You're not going to get the hard copy. You're going to get a link to the download page where you could go and download the copy and print it up. So, most people, when they think of order flow, they think back, 100 years ago to, Wall Street in the 20s, when everyone's looking at a ticker tape and trying to read what's going on. Nowadays, trading has changed. It's become computerized, and the amount of information that's out there is just overwhelming. It's like trying to drink water from a fire hose. And my goal today is to show you how you can use order flow in an easy to read format, how to analyze it, and more importantly, how to apply it to your trading. Now, for those of you that are not familiar with me, just a brief background. Since 2015, I've been the owner and trader of orderflows.com, which is a software and education company to teach traders how to trade, how to read the order flow. Prior to that, I spent 8 years at JP Morgan as Vice President of Futures Trading. I spent 3 years at Commerzbank as a Eurex trader, where I traded Bunds, Babel, Schatz. I traded them against the U.S. bonds, the E-mini S&Ps, the NASDAQ, the 5 years, the 10 years. Prior to that with Cargill, 4 years as a trading desk manager, where we literally traded every commodity in the world. Same thing at EDF Man. I spent 2 years there. And I started on the floor as a runner with Dean Witter, and I left the floor when electronic trading started gaining a foothold in the industry, right? I realized that, electronic trading is going to be the future, and, I wanted to position myself that way. So I left the trading floor and I worked upstairs to trade electronically. So what I did after I left JP Morgan is I started this company called Order Flows. And basically what I did is I took my, up to that point, 20 years of trading experience, and I wanted to put it into a software program. It's hard to get all your ideas down and put it into a software. So really what I did is I took, sort of the core concepts that I used in my trading career, and I wrapped it around an order flow format of software, a way to read the data. And I came up with the Order Flows Trader. It's an add-on for NinjaTrader 8. Now the charts that you see in this presentation are generated from my Order Flows Trader software. So basically what the Order Flows Trader software does is it takes all that information on the time and sales, right, which I just showed you, and it puts it into an easy to read format. Now, I didn't invent the volume footprint chart, another person did, but what I did is I took it a step further, right? I put my own analysis into that chart. It's not like Steve Jobs invented the iPhone. What he did, or he invented the iPhone, he didn't invent the hand phone, but what he did is he took the hand phone and he took it to another level. And that's what I'm always trying to do with the Order Flows Trader. I'm always trying to add new forms of analysis to help traders understand the market and find better trades. And just really briefly, other people are using my software. They're saying great things about it. Here's a user. She says, with the order flows traders software, she can see really what's happening in the market, like who's in control of the market on a very specific time and who's getting weaker as well. But this presentation, I'm not really here to sell you that software. I'm really here to talk about order flow. If you're interested about my software, you can go to my website, orderflows.com. So what do we know about markets? How do they trade? Well, we know markets trade through a two-way auction, right? There's a bid price and there's an offer price. So for example, if the market in the E-mini S&Ps, this is a little outdated, 29.55 and a quarter versus 29.55 offer, meaning somebody's willing to buy it at 29.55 and a quarter, someone's willing to sell it at 29.55 and a half. Okay, but no trade's going to occur unless somebody either lifts the offer or hits the bid. So what's got to happen, right, is you have to have somebody that's willing to say, I'm willing to pay the offer price. I'm willing to pay 29.55 and a half, or somebody that's willing to say, I'm going to sell it at 29.55 and a quarter. Okay. Now, in order to do that, you have to understand there's different types of trading that's going on. There's passive traders, there's aggressive traders, right? The people that sit on the bid are passive traders. People that sit on the offer are passive traders, right? Imagine you go to a car dealer, you want to buy a new car, right? And the dealer has a list price of $25,000 for the car, but you probably want to pay 23,000. Well, you want to pay 23,000. The car dealer wants to sell it at 25,000. You guys are both passive traders in that respect. One of you, for someone to either the dealer to sell the car or for you to buy the car, has to be aggressive. Either if you're the buyer, you want to buy the car, you move your bid up, right? You lift his offer at 25,000. If the car dealer says, knows in the back of his head, oh my gosh, I got 10 more cars coming in tomorrow. I got to start moving these cars. He might be aggressive and sell it to you at the price that you're willing to pay, 23,000. Right. So passive traders are those that work bids, work offers, and they wait for the market to come to them. Aggressive traders are those that don't wait for the market to come to them. They trade at the market. They sell into the bid or they buy the offer. Now, once you understand that difference, that there's two different types of buyers, there's two different types of sellers. You have passive sellers, you have aggressive sellers, you have aggressive buyers, you have passive buyers. Then you can start interpreting what's happening in the order flow. And what makes the order flow so powerful is it allows you, the trader, to see early signs of a move about to happen, but you have to know what to look for. Now, if you look at a normal footprint chart without knowing, what to look for, it's going to be pointless, right? It's like, a doctor, you go to the doctor, you have an x-ray done. Doctor holds it up, you look at it, and you say, oh, okay, that's my rib cage. Doctor can look at it, oh yeah, this is the problem, this is a problem. He's trained to understand what to look for in the x-ray, whereas unless you're trained, to know what to look for in an x-ray, you're not going to be able to make heads or tails of it. And the same thing goes with order flow. You have to learn what to look for in the data. Now, the good news is it's not as complicated as most people think. It's actually fairly straightforward. And again, it comes down to learning the basics. And the basics are delta, imbalance, and point of controls. Three things that pretty much all the rest of order flow, once you understand those three core concepts, everything else really falls into place. And it's all the information will show up on your chart. So delta is the net difference between aggressive buyers and aggressive sellers in a bar, right? So if you have positive delta, buyers are in control at that time. If you have negative delta, that means sellers are in control. And what it's doing is it's when an aggressive buyer buys the offer, that registers as +1 delta. If an aggressive seller sells into the bid, that registers as -1 in the delta. Obviously, if there's no trade going on, it's 0. And over the course of a bar, with your aggressive buying, your aggressive selling going on, however the bar ends up, you'll either have a positive number or a negative number. Occasionally, it does fall on zero, but that's just more of coincidence than anything else. But generally, when your bar has positive delta, it indicates buyers are in control of that bar, and it's usually going to be a green candle, an up candle. If you have negative delta in the bar, generally it's going to be a red candle. It's going to tell you sellers are in control. Now, imbalances, this is what happens in the two-way auction, right? We talked about earlier, you have a bid and you have an offer. When you have more aggressive sellers than aggressive buyers in the two-way auction, one bid at 2. If you have 6 buyers at 2 versus 1 seller at 1, you have an imbalance because there was 6 to 1. So generally people use imbalances of 4 to 1 as their minimum threshold. You could use whatever you like. I know people that use 10 to 1. I know people that use 5 to 1. I know people that use 2.5 to 1. But what's important is you want to look at what you consider an imbalance in the market. Think of it like a seesaw, right? You have 2 evenly weighted people on a seesaw, and it's going to be balanced. But then another kid jumps on the seesaw, it's going to be out of balance. And another kid jumps on the same side. You got 3 kids on one side versus 1 on the other. It's imbalanced. The 1 kid on the other side is up in the air, and the 3 kids are sitting on the ground. And that's the same thing in the order flow, right? If you have 3 300 aggressive sellers versus 50 aggressive buyers, you're going to have a selling imbalance, and it will show up in the bar, the volume in the bar, as either a blue number or a red number. Now, the last building block is point of control. Every bar has a point of control, and it's simply the price level in the bar that has the most volume traded, and that can act as supply or say support or resistance over the next bar. I have my software has a special feature in there where it will highlight special point of controls, which I call prominent point of controls, which indicate support or resistance in the near term, market turning points. All right, so one of the reasons why most traders fail is they focus too much only on price instead of what actually causes the price to move. And when you understand those 3 building blocks, delta, imbalances, point of control, you understanding what's causing the price to move, right? It's caused by buyers and sellers in the market, actual traders making trading decisions. Once you understand the relationship between the buyers and sellers, then you start to understand the market. So again, delta, I want to get into delta now. It's the difference between aggressive buyers versus aggressive sellers in the bar. Positive delta, buyers are in control. Negative delta, aggressive sellers are in control. And if you're looking at an order flow chart, you can see, the market's moving around. That's what the market does. It rotates around trying to find a price where buyers and sellers can be happy to trade together. And when the market is moving in a direction, it's searching for a new level, a new balance level. And delta can help you clue you in on when buyers are coming in thinking, oh my gosh, this is a very cheap price, the market's going to go up. Right here we are trading sideways for the most part, and then we see a nice big rally. This is a range-based chart in the E-minis, but you can see here, delta is going back and forth. Small, minus 488, minus 557, positive 157, minus 975, just 9, minus 1400, plus 1000, minus 1100, minus 247. But all of a sudden, delta gets really big. 2368, 2827, 6200 as it's breaking out of a consolidation. So I know that aggressive buyers are in control of this market. And then what happens? The market, puts in a 10-point rally, over the next hour. This is information that's available to you. If you're not using an order flow chart, if you're just using a regular candlestick chart, this is what the chart looks like, right? You can't make heads or tails, oh my gosh, are we going to put in a big rally? I don't know, depending on the type of chart that you're using. This is a range-based chart. A lot of the candles, they look exactly alike, but there's so much information out there for a trader to use if they know how to use it. Here's NASDAQ. This is on a 1-minute chart, right? We make a new low. Anytime you make a new low or a new high, you got to ask yourself, is this market going to reverse or is it going to keep going in that direction? And what happens at this low? I can see delta getting stronger positive, right? 28, 150, 239, and then boom, it rallies, in the next bar, 10 points on a 1-minute chart, with a nice strong positive delta. But the signs were in here in the delta that the selling was weakening and the buying was strengthening, right? This is information that you can use as a trader to make better trades. You don't want, I'm not trying to pick a bottom. I'm letting the market tell me that, hey, we're bottoming out here. The aggressive sellers are gone, and now you're seeing aggressive buyers coming into the market, right? If everyone is coming in to aggressively buy, what do you think that information is worth to you? It's be worth nice trades, right? That's really what you're looking for as a trader. Is you're looking for the market to tip you off on things. Here's the Nasdaq again, a 1-minute chart. Market's just drifting down. Boom, it gets the big push down. Okay, on whatever news, I don't care. I don't look at the news when I trade. I don't need to, because for one, in this market nowadays, the market's reacted before you even get the news. But really, what I'm watching is the reaction of the big traders and what they're doing. Because the big traders, they've got better news sources than I do. When I was working in a bank, I had great news sources. Now I'm not working in a bank. I don't have access to any of that information. I can't just pick up a phone and say, hey, it's Mike from JP Morgan, like I used to be able to. What's going on? What do you think of the market? And they'll tell me, hey, this is Mike from, trading in my home office. What do you think? There's, hang up on you. But traders sometimes think they got to be, reacting to the latest tweet, the latest news story that's coming across CNBC. You don't need to. You let the market tell you what's going on. The order flow information that you're seeing is the purest form of information, right? Because really, what you want to know is what's happening in the market right now. So what do you have? You're drifting lower, gets this big push, gets down to a level that buyers say, hey, this is too cheap. Sellers have been selling, but now buyers want to step up and buy it at this nice low price here, and it just pops back up. You can see the delta getting stronger, 102, 115, 300, and then it makes another quick 10-point rally. So that's delta, right? Now, imbalances, again, is when aggressive buyers versus aggressive sellers outnumber each other by a certain percentage, right? The industry standard is about 4-to-1. Now, again, it's not written in stone, but that's the starting point. As a trader, my goal is not to say you have to trade using an imbalance of 4-to-1, 400%, or you have to use 987 to 1, 987% to 1. No, it's for you to take the starting point, do your analysis, find out what kind of trader you want to be in the term of, how much risk you're willing to take per trade, and go from there. I've worked with a lot of traders over the years, and I've helped develop a lot of successful traders, and I found, the ones that want to be spoon-fed everything are the ones that don't really make it very far in this industry. The ones that take an idea, a concept that, a setup like I'm going to talk about later, the Delta Surge, take it a step further, and advance it into, a full-blown trading plan. So when buying imbalances appear, you're going to see on the footprint chart a blue number, a blue volume. And for a selling imbalance, you're going to see a red number. And this is how it appears on the footprint chart. You can see red number. You can see each bar's got, the volume at price on the bid side, on the offer side. So the red numbers inside the bar is selling imbalances. Blue numbers inside the bar are buying imbalances. And it's a very quick way to determine our buyers or our sellers in control. And you can see as this market's coming down, you're seeing pretty much every bar's got selling imbalances. Market hits the bottom, goes sideways. It's kind of mixed. You see some bars with no imbalances. Then all of a sudden you start seeing bars with buying imbalances, multiple buying imbalances in there as the market starts making the way up. And one of the features of the order flows trader software is it will highlight bars that have multiple buying imbalances in it, just as a visual reference, because nowadays we're all very, visual reference based. Everyone's on Instagram, on Facebook, and just looking at pictures all day long, and it's just easy to look at a bar that has a rectangle around it to tell me that there's multiple selling imbalances or multiple buying imbalances of the bar, which is information that I can use as a trader, because you can see, right, as this market is going down, hits the low, starts going sideways, got a bar with 2 selling imbalances, 3 selling imbalances, then starts ticking up, multiple buying imbalances here, another bar, multiple buying imbalances here. For now, now I'm convinced that this move down is over, because now I'm seeing the bars with multiple buying imbalances spread out in the bars, and the market moves higher. This is the euro currency, right? People always ask, can I use order flow on Forex, on stocks? Yes, you can. Not just futures. I think it works terrific on futures. I'm a futures guy, honestly, because I'm from Chicago, but it also works on Forex. But I think you're better served watching the Forex markets that trade on the CME, the euro currency, the British pound, the yen, etc. Now, again, we're up here, we're making new highs here. This is gold contracts, okay? Again, I showed you euro currency, I've showed you NASDAQ, showed you crude oil. This is gold, right? It works on, the same things, the same concepts apply on different markets. And that's important, because lots of times people like to curve fit their analysis on a market on a time frame. I'm showing you range-based charts, 1-minute chart, 30-second chart, 5-minute chart, volume-based charts. I don't monkey around with the settings trying to find the ideal setting for it. No, it's the same whether it's a one time frame, different time frames, different chart types, different commodities or contracts. But what's this market telling you? We're at our high of the day, right? That's this green line. As we made the new high, we got multiple buying imbalances. Now we're up here at our new high. I see multiple selling imbalances coming in, right? What you got to think, right? I mean, people don't like to think sometimes when it comes to trading. It's like they want to automate everything, but really the best computer is the one between your brain, one between your ears, right? You can figure out and make the decision for you, right? Forget about computerized trading. Computers are there to help you. I don't think it should necessarily do your analysis. So this market, we're at our high, we start drifting down. Start seeing selling imbalances, and we start trading down, 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 down off our high. The delta getting negative. Sellers are coming in at the high. This is important information that you should be able to use as a trader. Now, one of the important things of order flow is tells you when the market is moving fast. You want to know when the pace of the market has picked up and things are moving pretty quick. And imbalances is a way to see market sweeps. And what a market sweep is when a big trader comes into the market, just whacks it through several price levels. And you can see this is NASDAQ. This area here is what's called a stacked imbalance, where you have more than, generally 3. You could determine how many imbalances you want stacked neatly on top of each other. But more importantly, you see all these zeros in here. So it means someone came in, sold it, there was no counter trade. That's indicative of a market sweep. And you see market sweeps happen when there's, a data release, or a Fed speaker says something, or Trump tweets, and the algos or the big traders just come in and hit all the bids or lift all the offers, depending on what, if the news is bullish or bearish. And when you see big, long imbalances in a bar, that's indicative of very aggressive selling occurring in the market. And again, this is information that you can use to your advantage, okay? And you can just see how, again, this is a 1-minute chart. You can see over the next 1, 2, 3, 4, 5 minutes, this market dropped, over 20, well, close to 30 points in 5 minutes. But you could have seen it. You can't say, well, I would have missed it. I would have got in late. No, this is a minute-based chart, and if you're watching it, you'll see that occur in the market. You get short, right? You know that your exit, your stop exit, is just going to be above, this selling imbalance, or maybe even a little bit higher, above the high of this previous of the bar with the selling imbalance. You know where your risk is, right? And your potential is, boom, all the way down to the low of the day. So the third building block I'll talk about is point of control. Now, every bar has a point of control, and it's the level in a bar that has the most volume. And it's important because in a basic sense, it helps you determine where value is in a bar. And if you know where value is in the market, then you can make better trading decisions, right? Because if you could determine if something is cheap or something's expensive, then you know whether to buy it, right? I went to Costco yesterday. My wife's like, why are you buying this? You know, the coffee. I like to buy the Keurig cup coffees when it goes on sale. Normally I think it's like $42, but it's on sale for $35, right? Because I know that normal price is $42. Hey, I could buy it $7 less. I'm going to buy it. You know, just like the laundry detergent. That's why you buy so much laundry detergent, because it's expensive normally. But if it's $5 off or $4 off yesterday, I'm going to buy it, right? And point of control in the bar gives you a reference point where the most volume occurs, because generally where the most volume occurs is where people are happy to trade at that time, you know, at that snapshot. In this case, is a 5-minute bar that, you know, at this price, like on this big green bar here in the middle, you can see at 31.23, that's where most traders were happy to transact. Okay, and that's going to be my reference point into the next bar and the next bar and the next bar, because, you know, oftentimes, you know, people always say, gosh, Mike, I wish there was a way to determine, you know, why do bars trade back to a certain level, then rally, or trade up to a, you know, trade back up to a certain level and then sell off? Well, oftentimes it's right around the value area of that bar. You know, if you've ever done any analysis of market profile and volume profile, you'll understand, you know, what the point of control is on a day time frame. Point of control on an order flow time frame and an order flow chart is sort of a micro sense. Okay, so I know that the point of control of this bar is the area where everybody, well, not everybody, where it has the most volume. All right, so that's my reference point for the next bar. And if the next bar trades higher, okay, I can start getting a bias that this market is going to start rallying. Now you'll notice these bars, you know, they come off to a certain level and then rally. They come off to a certain level, then rally. I know point of controls are moving higher. That's bullish. But more importantly, in a lot of these bars, point of control is holding as support, right? Holding as support, holding as support. You know, maybe it gets through it by a tick, maybe doesn't reach it by a tick, but it's coming within a tick or two, right? Imagine, you know, as a person being able to know where the market has a high potential to pull back to and then rally from, you know, where the market's going to stop and then continue its move. That's the point of control. That's why point of control is so important to understand, because the point of controls are moving higher in each bar. If each bar has a higher point of control than the previous bar, it's telling you the market is moving higher. Value is moving higher, right? In moves down, it's going to, point of controls are going to be moving down. I mean, and look at this, on this move down, we're making new lows, but watch each bar, right? It comes back to within, you know, a couple ticks or right to the previous bar's point of control. You know, this is signs of what a bearish market looks like. Now, as this market starts rallying, right, we hit our low. We've got these 2 point of controls lined up. They're both blue color. My software will indicate point of controls that are acting as support or resistance. They'll color it blue if it's support. They'll color it red if it's potential resistance. And they act as turning points. But as you can see, as this market starts rallying, point of controls in each bar are getting higher. The current bar will come back and come within, you know, a couple of ticks of that point of control. So it's holding as support, right? It's holding as support. Now, point of control, you know, is very revealing at certain areas on a chart, right? You got to remember, you know, pullbacks. You know, people love to trade pullbacks. You know, here's the E-minis. This is on a 5-minute chart. You know, we hit our high, we start selling off. You know, oh my gosh, you know, got these red bars, we got all this negative delta, this market's coming down. But then I got a prominent point of control. This is blue color here. It's telling me based on the volume of this bar, you know, this is where we have the most volume in the bar. You know, it's coming in, it's lining up with sort of this previous point of control here, where you also put in a lot of volume. That this point of control is probably very supportive. And then what happens? The market rallies up. Now you could also use the other parts of order flow analysis, right? What are you seeing in the delta? You're seeing positive delta here, 341, 846, 2000 before you get to the high and make new highs. So you could confidently buy this breakout here to new highs. Now, the thing with order flow, right? It's like cooking, and you have the different pieces of market analysis. You got delta, you've got imbalances, um, and you got point of controls. You know, that's your different ingredients that you got to put it together to make, you know, your nice pasta dish, right? Otherwise, you know, you're just eating one thing, right? But you know, why not have a meal? Make a meal of the market. You know, this is the Nasdaq just a week or two ago. This is from an email I sent out. 30-point sell-off right off the high of the day on a 30-second Nasdaq chart. 30 points on a 30-second chart. The Nasdaq. Now, granted, you know, these markets have been very generous to traders this year. I know a lot of traders that are, you know, making their whole, you know, their daily goal, you know, in the first 30 minutes of trading. So if you know what to look for, right? And here it is on a footprint chart, right? If you're looking on a normal bar chart, you know, what makes selling this high any different than the previous high, right? This is the move you want. You want that big move down. If you sold the previous high, yeah, it made a move, about a 8-point move, but we're gonna get, you know, before rallying back up and potentially stopping you out. But this is the move that you want, right? You want those big 30-point moves. And I'm not saying you get 30 points, but you know, if you get 10, 15, that's fantastic. But if you're watching the order flow, this is where it gets very revealing. That's why I say when an order flow is very revealing to traders. You could just see here, we're at our high. All of a sudden you see aggressive selling coming in. You see the negative delta starting to grow. You see selling imbalances in these bars. You see point of control, 1, 2, 3 starts going lower. More importantly, I'm not going to get into it now, but there's a difference between max delta and min delta. But you can see how it's gone from 0 min delta, all max delta, to 0 max delta to all min delta. This is very important information as well. And then boom, you know, you had the 30-point drop right from here. This is these 3 bars right here is what you're looking at right here in the order flow. And again, it's very, very revealing to a trader. You know, order flow is also going to help you determine when highs are weak or when lows are weak, right? Weak highs have mostly negative deltas and selling imbalances are going to be appearing, right? You see that we're at this high here and, you know, just, you know, made a new high by a tick, but then you're seeing, you know, some negative deltas appearing up here at these highs. You know, you're at highs. You don't want to be seeing negative delta if you think the market is going higher. If you start seeing negative deltas, meaning aggressive sellers are in control, you're going to think the market is getting heavy, right? It's going to get ready to sell off because everyone is selling, right? Who's buying? Well, there's buyers, but what you have is mostly sellers, right? You're seeing the selling imbalances, so you see mostly aggressive selling appearing, right? You see multiple selling imbalances. You know, point of controls, you know, they sell off, and then the market eventually will sell off. Now, if you're at a low, you gotta be asking yourself, you know, are we going lower or are we going to potentially reverse? You know, this is one of my favorite trade setups is when we make new lows and I see bullish points of controls, right? Prominent point of controls that are telling me that, um, you know, hey, there's support down here. You have passive buyers potentially stepping up to the market and bidding the market, right? They're arresting the move down. They're sitting there saying, you know, I'm willing to buy it down here at these prices, right? And then you start seeing aggressive buying coming in the form of imbalances, right? You see this bar's got 1, 2, 3, 4 imbalances. You even have a stacked imbalance here. Then another important fact is the deltas are turning positive. They've gone from negative to positive, you know, and it's important to watch what's happening down here. These bars as we're coming into the low, minus 354 delta, minus 126 and 16. Then you get another push here, minus 332, minus 130. Now it's turned positive. And then it's followed up with another positive, followed up with another positive. So even if you're not convinced off this, you know, these 3 bars off the low, by the time you get, you know, into the 4th bar or the 5th bar, you should be pretty well convinced in your analysis that this market has hit a bottom. And what happens is the market rallies a quick 25 points, it's 20 points off, right off, the bar off the low. But, if you're still not convinced and you still need a little bit more conviction, you just wait a while. Let the market tell you that this market is getting ready to rally. All right, so the thing that I want to talk about, share with you guys, is the delta surge. That's the setup that, on my website, I actually have an indicator created for, but I'm going to share it with you, what goes into it, basically. So, if you're looking at a footprint chart, whether it's my order flows trader chart, or if you're using Sierra chart, or you're using somebody else's chart, you could use this setup in your trading and look for it when it occurs. And what it is basically is steadily increasing positive delta for a buy, or for a sell. Watch for steadily increasing negative delta. And I should preface that by saying, it's over 4 bars. So the first bar for a buy would be have negative delta, then a positive delta in the second bar. The third bar will have slightly stronger, and the fourth bar will have the strongest of the 4 bars. And for a sell, it'll start out with positive delta, then a smaller negative delta, slightly bigger negative delta, and even bigger negative delta. But the easiest way to see it is look on a chart. So this is charts from this morning, okay? This is NASDAQ. You remember, right after the cash open, the market just fell over. It just fell out of bed. But if you're watching the order flow, it's on a 30-second chart, right? Here you have the delta surge, right? You got this bar, this green bar, positive delta of 58. Next bar, right after the cash open, minus 169. The third bar, minus 198. The fourth bar, minus 356. Where this arrow is, this is the bar you'd be getting short in, and it went from 82 down to 62 in 3 minutes, right? And you could also take into account what's happening. You got selling imbalances. Each bar's got multiple selling imbalances in it, and obviously lower point of control. So all the signs are pointing for the market to go lower, and it just fell out of bed. It fell out of bed by over 20 points in a couple of minutes. This is Apple. People ask me, can I trade stocks? Well, honestly, I say limit it to the big cap stocks like Apple. But same thing, right? We just opened, right? First bar, you got some buying in there. You got nice big positive delta. Second bar, negative delta, 10,000. Third bar, minus 17,556. Next bar, 17,578. So it's a little bit higher. But then watch, it goes from 317.30, boom, all the way down below 316 in 2 minutes, right? 2 minutes. Now, this is crude oil. This is overnight. This is at midnight Chicago time, 12:40. It's on a 5-minute chart. So say, you could only look at longer terms. This is a 5-minute chart here. We're coming down. We're right near our lows of the day. This red line is our low of the day. Then it just changes right here. You see the negative delta 33, then positive 53, 117, 159. And the market goes from the 70 area all the way up to the 00 area, 5570 up to 5600. It's a nice 30-point move over the next hour and a half. Again, it's a 5-minute chart. But how about during this morning, right? This morning around 7:30, we had a surge up here, a negative surge, right? You got the market's going sideways, right? This is how the delta surge, how I first started using the delta surge, because I used to trade a slow moving grain market, and I was looking for areas where aggressive buyers or aggressive sellers were coming into the market, okay? And this delta surge was the way that I used to determine that buyers were piling it, slowly getting into the market or slowly getting out of the market. But you can see here 148, 130, minus 136, minus 896, minus 2720, 2077, as the market sold off from 5540 down to the low 5500, 5510 area. There's even one a little bit earlier than that, where you have at 6:30 in the morning, the positive delta 313, then minus 87, minus 357, minus 531. Then the market went sideways before the sellers reappeared, and the market again dropped a quick 40 to 50 cents. E-minis, 15-minute chart. People say, hey, I'm more of a swing trader. Is there something I could look at in the order flow that, I could use for my trading? Now, I wasn't expecting such a big sell-off this morning in the equities, but you got to be prepared for it, right? Here we're in a very tight range coming into the morning. Basically less than a 10-point range, a 9.5-point range, which, as you know, is pretty quiet in the S&Ps coming into the morning. But you can see the delta surge started when we're at our high of the day. Negative delta, next bar, negative delta, next bar, came back within a tick of the high, negative delta, the negative delta as this market started selling off, right? We sold off from basically, the 16, 17 area down to, I don't know where we are now. I haven't looked at a chart in the last couple hours, but if you got 10 points out of this, that's great. If you got more than that, fantastic. So hopefully by now, you can see how order flow can help you identify trade direction. By understanding who's in control, you can find great low risk trades. Don't overcomplicate trading. So for those of you that have stuck around and are interested in my book, you go to orderflows.com/book.html. It's going to take you to a page. You have to enter your name and email address. Then after you hit submit, it will take you to a page that you can download the book. All right. Or you can always shoot me an email, mike@orderflows.com. And again, if you're interested in the software, you can go to orderflows.com /special.html to find out more about it. But I just showed you how to use one piece of information, the delta, right? There's so many other ways to use the imbalances, points of control, how to combine them to find better trades. So again, you could get my book at orderflows.com /book.html. And Anna, I'll throw it back to you now.
All right, welcome everybody to Investors Expo. Yours truly, David Morgan. I am the publisher of The Morgan Report. You can find more information at themorganreport.com. I am primarily on the equity side, and I do futures and options, ETFs, basically anything, but my main focus is in high net worth investors, some retail investors, hedge fund managers, investment banks, and bullion dealers. Focus primarily in the resource sector, and that's not just gold and silver, although the portfolio is primarily that at this point in time. But we've looked at everything from rare earth elements, in fact, we're the first there, into the base metals, copper, moly, lead, zinc. We actually called the zinc shortage that appeared a couple of years ago, made one trade there, doubled our money, and got out of the position. So today I'm going to go through something that I've done on this previous Investors Expo, and what I talked about was a presentation titled something like "How to Become a Billionaire in the Resource Sector." And what I explained in that previous Investors Expo presentation was that, excuse me, that the billionaires in our sector are primarily fund managers, and they really aren't better investors than many others that are also specialized in the resource sector. But the reason that they're billionaires is because they get an advantage that very few people get. And they're very much remiss to speak about it. They actually, to my knowledge, never speak about it. Now, amongst an inner circle or at a cocktail party or among their friends or money managers, they probably do. But from the general public, this information is withheld. And the opportunity I'm talking about is what's known as private placements. Sometimes it's private equity that goes into a publicly traded company, and then that becomes an IPO. Well, these people are 2 or 3 or sometimes even 4 steps below the IPO, usually seed financings. And you get a huge advantage because of that. You're almost guaranteed, I say almost guaranteed, in every case to win. So when you hear, for example, Eric Sprott, we are friends. I do have his private cell number, not many do. He is a billionaire. He's one of the best known names. runs the largest fund in Canada. He's had me by his side a couple times on the SLV when he started the silver investment, physical silver trust. He actually flew me up to Toronto and sat with him and his staff to go over that. But I don't want to digress too far. I just want to let you know I do have a relationship with him. But if you hear him on an interview when he does several for the public, he'll tell you that he never buys a major stock, that he only buys juniors. And this is probably true, but he doesn't finish the story. So the general public gets the idea that buying these small penny stocks is the way to get rich. It is if you're Eric Sprott. If you're the general public, you'll probably go broke. Those returns I read to you and Anna at the beginning were top tier, cash rich, unhedged mining companies and royalty companies. Every one of those companies is over $1 billion market cap. And this is safe money where a fund manager can move in 10 million, 20 million, 50 million, 100 million even, and probably not disturb the market too much. These micro cap stocks are a whole different animal. So having said that, the way it works is you have to, there are certain rules. You have to be an accredited investor, which means you can look it up on Google, but rather than me say it, but you have to be an accredited investor. You also usually have to hold the stock for a certain amount of time before you're allowed to sell it. And there's some paperwork to fill out basically saying you are who you say you are. You can do it as an individual. You can do it as a partnership. You can do it as a limited liability company. You can do it as a trust. You can do it as a corporation. I mean, there's basically nothing that prevent almost any person or entity to participate as long as that entity or person is accredited. So here's one that Eric Sprott is not doing. And the reason he isn't doing it, in my opinion, is he wasn't first in, and it's really not from his inner circle. Many of these, in my studied opinion, are not worth doing. Why? Because a lot of them are these micro cap companies that just need money to continue to go. And some of these financiers are willing to put up money, and then when the stock trades freely, they sell it at a profit and back out of the company. So I look for ones that I am willing to risk my own capital on, and it is a high risk, high reward situation. So before I go through this presentation on Rena Silver, let me just state that in the greater scheme, if you do 10 of these, 2 or 3 will probably go to zero. 3, 4, or 5 will go up 400, 500, 600%. And 2 or 3 will go up 10-fold, 20-fold, sometimes 100-fold. I don't want to promise that, but they have. In fact, the last major one I did probably will go up 100-fold. But anyway, coming back to Rena Silver. So this is this is pre-public. This company is a great land position, and I have to give you the forward-looking statements here, which I'm not going to read to you. Basically, high risk, high risk, high risk. Don't do anything. Don't do it. Don't do it. Don't do it. So there's some forward-looking statements. So as most of you know, and if you don't, you can get my background on the website or just Google David Morgan Silver, and you'll get a pretty good synopsis of how long I've been doing it, what my reputation is like, and everything else. So this Rena Silver situation is primarily a property that Dr. Peter McGaw, and he and I have been friendly for years. Peter, in my view, is the best exploration geologist probably in the world, and absolutely without a doubt in Mexico. He spent most of his life there between his place in Arizona and Mexico. And Peter really, really likes this. In fact, I just met with the CEO of Rena Silver 2 days ago. It was my last meeting at the Vancouver Resource Investment Conference before I got back on an airplane and came back here to where I live. So you can read this. The board of directors is pretty well stacked with people that know what they're doing. Peter Jones was with Hud Bay, and I know that most of you are not familiar with the resource sector as I am. I'm not going to presume anything. I'm just giving you some key ideas that you can look up on your own and take it from there. But Hud Bay was one of the better big cap companies that performed quite well. It was on a major exchange, has been there for years. So basically it's a very seasoned expertise management for the most part. So you can see here, and this is important on these type of financings, to make sure that the board of directors and the management has a good stake in it. And you can see from this slide that the management has almost 27%. Now, some of these, what I'll call pump and dumps, the management has usually not that much in it. They can, but it's not always a guarantee, but it's a pretty good guarantee if the board and the management has invested their own money, then normally you're safer. Mag Silver has 19, almost 20%. You can look Mag Silver up. It's one of my favorite near producers. I've owned it for years, back and forth. I've traded in and out a couple times. Some resource funds, 8%. So this is already, remember, this is not listed yet. This is a higher risk than I normally do, but I'm certain it will be listed. And the extra risk spells extra opportunity. So some of the funds are in. Global Century took 5%. Other investors would be usually people such as myself and others that are connected to this industry at a pretty deep level. And then we see the rest there on the situation. Now they're raising about 5 million, and there has been 4 million raised right now. And there are limits as far as how much you can invest. In other words, like I just mentioned, Eric Sprott, let's say he goes, God, this is the best thing I've seen in the last 5 years. I want to buy all of it. Well, I can't. It's prevented from doing that, which is a good thing in my view. There's a picture of Dr. McGaw. Again, I think if you're interested in this, certainly I will be available to you. I'll tell you about that at the end of the presentation. Definitely, it's not something you want to rush into, and if you're not an accredited investor, it's not for you. But Jack wanted to see, some opportunities as I continue to participate in the Investors Expos presentations. This is a little different. You've probably never seen anything like this, and you may not be aware of how the mining sector billionaires become billionaires. So there's Peter, Kerwin. I'm going to just go through these slides pretty quick. You can look at them on your website. Excuse me. Now, here's the land package that RENA has presently. They may add to it, they may not, but you can see that there's more than just one situation here for the mining assets that are held by the company. This is the main area here, and this is a very well set, meaning it's got a skilled workforce nearby and the infrastructure is good. And you hear this all the time, but a lot of times you hear it, it's really not true. In this case, it is true. It is near an international airport. It is near a major highway, and there are hard surface roads going in. A lot of times I'll hear that, it's got great infrastructure. And once we take our trip down to the project and put boots on the ground, as they say, the highway is many kilometers from a dirt road that's only available in the summertime. In the winter it washes out or whatever. I'm just trying to give you a picture for sometimes things are not always as presented. So we go on these trips to make certain when we're at risk that we know as much about the project as we possibly can. So the Sinalina district is one of Mexico's best silver districts with large carbon replacement deposit. I don't expect you to understand what a CRD is, but that was how Dr. McGaw got his doctorate. He had a theory about carbon replacement deposits. That's what was the foundation of Mag Silver, which is a huge winner. If you look that up, you would have made multiple times on your money. And this one is similar. So his theory was proven to be true. It went from a theory to an actuality. The historic production was about in the grade ranges here of 310 grams per ton silver, 32.2 grams is an ounce. So that's about 10 ounces of silver. So that's $180, 8% lead, 7% zinc. And these are huge numbers. Again, I don't expect anyone on this presentation to know this stuff. That's one of the reasons I'm doing the presentation. And there may be a mining engineer listening to the presentation. I don't know. What I do know is These are very unusually high grades for, especially in today's world. This project is one of the world's largest CRDs, as I said. And I don't want to go too much. These kind of slides bore me. I don't want to put you to sleep. If you want to learn more about it, you can certainly, I can send you the presentation if you're interested. But the main idea here is that they've drilled out some of it in the earlier days, and again, very high grade. So if you're looking at certain holes here, again, these are kind of boring, but I do want to go over it. Hole number 5, as it says on the left, first bullet point, return a narrow intercept. You want wide, but if it's a vein system, they usually are narrow. Vein underground systems are the highest grade in almost all cases, which means more money to you, basically. The open pit, low grade situations that are most of the mines today are barely economic. And the key saying in this industry is grade is king. The more ounces of whatever mineral you're looking for that you have per ton, the richer you are. And that's obviously common sense, but believe me, common sense isn't that common in this industry. So hole 6 was 8 meters of 120 grams per ton silver. So again, very, very good relative to what we see in today's world. We still show you the target area for more exploration. When Peter is the technical director of the project, there's usually very few drills that are wasted. In other words, some people really don't know what they're doing. I won't name any names, but they just go out with the drill and try to find something rather than do the necessary homework and pre-study before they set up a drill program. That doesn't happen in cases with Peter McGon. Not that they don't do a drill that comes up empty, but it's usually forecast. We expect the target to end here. Let's drill it. And there's nothing there. Yep, it ended there. That type of thing. No one's perfect in this business. I'm not trying to apply that. What I am trying to apply that these are huge opportunities for upside. And if you have the right people and the right area, it can be very, very lucrative to you. Another one of these slides that bores me, you can look at it. This is the camp on the east side. This is more of a geologist picture of where the previous mining activity took place. You can see there were 2 shafts and it went down extremely far in the ground, but we do think that there's a lot more here that hasn't been mined out. You can get a picture. This is kind of what we see when we fly into these areas and take a truck in and actually do our due diligence on the ground before we write up a full report and recommendation. This has been, oh, by the way, let me pause here for a moment and say that I have recommended this to our mastermind group. And to be in our mastermind group is $2,500 per year. And for $2,500 per year, I present opportunities like this to the group. And some participate, some don't, some wait for the next one, whatever. It's never a high pressure sale. So I'm presenting this today to Investors Expo, no charge. And again, if you want more information, I'll tell you how to get a hold of me at the end of this presentation. But anyway, you can see that pretty good situation at hand. This is typical of the Sierras in Mexico. You just look at those, and most people go, "Wow, what a beautiful blue sky and great mountains." And geologists see they see assets in those mountains. You can see the focused area. I'm going to, get through these pretty quick because I've sat through so many of these presentations and I know they can be boring. This is a survey here. The colors give the geologist a good idea of where the best targets are. That's part of the homework process, but it's not all of it. They do geophysics, which is basically soil samples. And again, they try to do as much accurate predetermination of where the most likely place is to yield a return, meaning they're going to get mineralization and hopefully massive mineralization. Again, this is that type of survey taken from the air. Another look. To me, I'm not a geologist, but I do a lot of these mining trips, and you get into these areas, and for me, it's usually pretty stunning a lot of times, Peru, Chile, Colombia, Mexico, all over. You realize, or at least I realize, that there is a lot of empty space on this planet still. You get into Hong Kong and New York and you think, geez, this world is so crowded. But you get out of these mining districts and you realize, man, there is a lot of open country. This is historic. This gives you an idea that this actually was, to my knowledge and what I've been told by people I trust, the most prolific, highest grade district in Mexico, which is saying a lot because Mexico is usually number 1 or 2 silver mine in the world year after year after year. And this shows you the amount of silver production done, basically what I call burrow mining. They didn't have the sophistication in the mining industry at that time that we have now. So you could see there's 300,000 ounces of fine silver, and each bar was 25 kilograms. So here's some of the intercepts. Again, kind of a boring chart, but if I'll just interpret it for you, and it's pretty easy to see. They show you the interval, which is the 4th column over. So they number the holes. 4th column over is the intercept in meters. And these are very, very narrow. 1 meter is 3 feet, as you all know, or approximately 3 feet. So this is the truth meter. The drill is the truth meter. So it tells you what they're discovering or not discovering. But when you're only at a meter or whatever, it's a very small sample, but it is a sample. And here's what they've discovered here. When you look at the silver in ounces, you can see, for example, hole 5 there, about 3 ounces. Hole BA07-15, 89 ounces. It was only over a meter. And then the others 2, 4, 5. So nothing outstanding except that one hole, but enough. Any of those are mineable if you find enough material, which is pretty much a given in this case. A little bit of the history about it. Actually, I was told by Jorge, who I met again in Vancouver, my last meeting before I got back on the airplane to come home, told me that Dr. McGaw actually stayed on this property for quite a while, like a couple years while he was writing his doctoral thesis. So if there's any project that he's very familiar with, and he's familiar with several, but this one is one that he sort of has an affinity toward, because when he was younger, he actually lived on the project. New working hypothesis, the mineralization concentration in the zones containing large stage quartz, monazite, and latite porphyry likes where these cuts are preferred in the host rocks. And, you know, it's just a bunch of geology talk. Basically, they like what they see, they like the target, and they're basically going to take the drill of their truth meter and find out. So I'll keep it simple. Another kind of confusing chart, just giving the aerial view of the area, how big it is. It's a large area, and there's several potential mines here. And this is what's called a district play, which is what you really want, especially when you're at this early stage. You really don't want just a potential discovery and nothing else. You want an area that's large enough, shows enough potential that if you miss at one, you've got 3 or 4 other places to go, 5 or 10, whatever. It's in a prime district, as we know, strategic position, and it's a district scale potential, which is what I just mentioned. So when you get into the district, that means mine after mine after mine after mine, which means if they hold the land package, and they do, you're looking at a situation that's like owning 5 or 6 or 7 mines instead of just one when you buy or own, you know, when you're a stakeholder in the project, put it that way. Shows you how they're burning through their money, which is very typical of the mining operation. Shows you silver valuations with other silver companies. Let's see, I probably should disclose. I own Minorum. It's on our speculative list. It's another Peter McGaw project. I just spoke with Daryl Rader, was the last person I spoke with before I came back here. So I own that one. Discovery, I don't. Kootenai, I do. Silver One, I don't. Defiance, I don't. Southern Silver, I don't. I don't. Radius, I don't. Azure Gold, I don't. And Silver Viper, I do not own. So here's the process that's going to hopefully make money to the stakeholders. You have Century Metals did a rollback. Arena has common shares of 19.6 million. They're converted 1-to-1 as Century Metal shares. raising 4.2 million, which has now been raised up to 5 million with a half warrant. I think everyone on this call is smart enough to know what a warrant is, but if you don't, it's kind of a sweetener for financing. It allows you to buy more stock at a very favorable price in most cases. And then MAG converts 100% of preferred shares to the 9.68 million Century Metals and owns 19%. This is kind of the acquisition trail that you can follow. Again, if you want this presentation, you can get it. And if you need a meeting, I can set it up with myself and Jorge, who's the CEO of this project. So that's the end of the presentation, really. Again, this is something that I usually give to my masterminds only, which is a $2,500 a year service. But I met with Jorge. I told him I'd be doing this with, and I don't need his permission, but I want to let him know so he didn't get, calls from people and was unaware of where they came from. So the website's renasilver.com. You can see the CEO, Jorge, at renasilver.com. There's the address for their Toronto office, and you can call them direct if you're so inclined. I will pretty much leave it there. I do think that's the last slide. So again, these aren't for everybody. You must be accredited. You have to have a little patience. Usually the hold is a 6-month hold. Again, I'd say the average return on these is like in the 400 or 500% range, but sometimes they go far, far, far greater than that. Since this is really pre-public company, but it will be public very soon, the potential is even greater, but the risk is slightly greater as well. There is some left. So if you're interested in finding out more, you can contact me at my consulting client only email, and that's silverguru1@silver-investor.com. I'll say it again, it's silverguru, SILVERGURU, and the numeral 1 at silver-investor.com. The other thing is you could call the main office, and my staff will forward an email to me and I can call you back. That phone number is in Arizona. It's 480-325-0230. And lastly, if you just want to set up a call, I have a method to do that. And all you have to do is go to www.talkwithdavidmorgan. It's a long one. It's all one word, talkwithdavidmorgan.com, and it will bring you up a scheduling scheduling slide, and you can pick a time and a date and click in there. It's limited to 15 minutes, but if there's more to be done beyond that, I usually cannot extend that call, but what we can do is set up another one at another time. So you have a few ways to get a hold of me. One, you can email me. 2, you can phone the office. And 3, you can set up a schedule with the software we have at www.talkwithdavidmorgan.com. And I think I'll leave it there. I just want to say, I guess, a few words about the silver industry, since it is one of my favorite minerals to work with. The idea about silver is very fascinating from the aspect that when we had the big rush into the metals from 2000 to 2011, every single mineral out there, be it zinc, copper, lead, gold, moly, aluminum, you name it, every one of them hit a new nominal high in price except for silver. Silver just touched its previous nominal high, which is $50 in 1980. It hit almost 50 the last trading day of April 2011. And anyone on this call that's a sophisticated investor, and you all are, knows that $50 in 1980 was worth a heck of a lot more than $50 in 2011. So silver is, in my studied view, the most undervalued asset in the entire resource sector. And the way to gain leverage on the mineral, any mineral, again, copper or whatever, is the best leveraged and risk to reward profiles to the equity markets. Can do ETFs, can do futures, can do options. It's basically up to you, but I've been at this 40 years and this is by far the best way. And the best of the best is to do it through the equity market on a advantaged situation like this. Normally our mastermind, I only see a couple a year that I really like. This is one I really like. Of course, I'm involved, as you know, so I'm disclosing that. I think that's about it. Anna, I want to go ahead and turn it back over to you, see if we have any questions. And then if there are any questions, I guess I can turn it back over to you and either yield my time to the next presenter, or I can do, I have another presentation I can bring up and go through part of that if you wish.
Hi, David. We have about 15 minutes left. And have you seen the question from Steven member?
Let me look here. I have that on the
Hello,
others.
David. Could you speak on the benefits of the Morgan report for the average investor with about 20K to invest? I have a core position in precious metals, but would you like to get in on the stocks as well?
Okay, thank you for that. Yeah, that's kind of the minimum. I mean, I've been in this, as I said, for several decades. And if that 20,000 is what you would devote to the resource sector, that's good. And yes, you can get involved. I think the best way to do it is to get on our free list. So let me bring up another slide here so that we can give you some more information about what we do here and hopefully help you out. So I'm just going to the website right now. And so if you hit the subscribe button here, first of all, you just want to get on our free list, which just go to this URL, themorganreport.com. This is that URL I just talked about that you can speak with me 15 minutes. So I'm just going to go through this briefly, but we do analyze all the resource sector. As I showed you here, we do more than the precious metals, although the portfolio right now is. And yes, it is for the retail investor. I mean, the bread and butter person that is a member of the Morgan Report is somebody that has a stock trading account, usually one that they manage themselves, like a E-Trade or Ameritrade or Scottrade or something like that. They're pretty familiar with the sector. They usually own precious metals first before they get in the equity side, and they're looking for some guidance. So yes, we do all of those things. And again, that's probably what our bread and butter is. Usually goes on the retail side from around the 20,000 level up to the 250, 500,000. Obviously, I've dealt with many people well above that, but they're usually on the mastermind level because of the financings and other insights that we have that's pertinent to that level of investor, but not for the average resource investor. Have a moderate portfolio. I divide it into the top tier, the mid tier, and speculations. And as I say, this is where we bet a little, win a lot. A lot of people used to say, go big or go home. If you put a lot of money in these story stocks, you're going to go broke. You don't want to do that. You want to do what I teach. When you do join, you will get a PDF file that I'm going to rewrite, by the way, called How to Use the Morgan Report. After I rewrite the How to Use the Morgan Report, I'm also going to make a video about it, and that will be probably in the next week or two once I get a few extra minutes. Look over my shoulder. I am a position trader, long term. I do not day trade. I'm lousy at it. I don't have the time. I travel too much. But I do look for major moves. The last super major move I made several here in recent times, but the major was that 2011 move. I'd have to look back, but it's recorded, so you can prove it's on a recording, so it can't be fudged or whatever. But silver had based it at $19. It was in a channel formation. It broke out at 19, and I went long. I held it up to 26. which is a $7 move on leverage. That's a ton of money, a ton. And then QE2 was announced. So I sold at 26. QE2 was announced. I got right back in at 26, probably a couple days later. And I rode it all the way up to 48. So I had several people that retired on that move. They stayed in, they followed me the whole way from 19 up to 48 on leverage, and did quite well. And like I said, sent me some love letters and we're basically out. Updates and alerts. I should probably redo this page a little bit. We just added a update service, an alert service for text messages on your phone. I didn't charge anymore, even though it cost me more. So you will get it by email. Excuse me. We also had a widget that my webmaster developed that you could install on your desktop, and it would pop up an alert. So if you're working on your emails or writing something, if you're at your computer, it would pop up kind of innocuously, but it'd get your attention, and you'd say there's an update or alert from the Morgan Report, and you would click on it and log in and see what the alert was all about. We've pretty much eliminated that now and just gone to text. You do not have to do it. It's your choice. If you want to stay anonymous, or you have too many texts on your phone or whatever, that's fine. You don't have to do it, but you know, most everyone that is a member does. In-depth research, it's Wall Street quality. If you've ever seen a resource newsletter in the past, you will have a great measuring stick to compare what we do versus what the industry does at large. If you've never invested in a financial newsletter, I would say that you may have too big an expectation. It's kind of tough on me because I get people that trust me and want our service, and then they get it and they see it and it's, you know, it's not for them, and that's fine. We do have a money back guarantee, so that doesn't upset me. What is interesting is we really prefer people that are somewhat sophisticated, that have invested or at least read a few investment newsletters, so they know what the industry, I'm not talking about just the resource investment industry, I'm talking about investment newsletters, because there's all kinds of them. They specialize in startups, they specialize in utility stocks, they specialize in technology, they specialize in, and there's several that specialize in gold. I don't. I do more resources. I'm known to be one of the few that really gets an in-depth look at the silver market. But anyway, we will put our work up against anybody's. In fact, that 63%, that beats out every gold fund manager out there. Frank Holmes, friend of mine, saw him at the show, talked to him several times. Garibaldi, any of these funds that you could put your money into will do well, did well last year, but they didn't do as well as the Morgan Report. First to hear new discoveries, I kind of toyed with that because not always. I mean, a lot of times there'll be Eric Sprott, Rick Rule, some of these billionaires that hear of them before we do. But when we get them, we present them. So that Rena Silver is a freebie. I gave it to you for free. Now this gentleman with the 20,000, he's not accredited. I want to make that clear. You would not be able to participate in that. You have to sign a form saying you're worth $1 million outside of real estate. You can write a check that big. That's basically an AI. That's kind of the extreme case. You can look it up on the internet, accredited investor definition. And perhaps you are. I don't want to presume too much. I don't know you. What I just know is what Anna relayed. But from what I heard, it sounds like probably not. So if you wanted to join the report for that opportunity, please do not. Just if you want some general equities that you can do really well with next year, I think the 60% that we made this year is very achievable. Another thing that I do that most don't is I let you ask me 2 questions a month. And I may have to cut this back. We are starting to get more interest in our work as the sector's coming back. As I just told you, it was actually double the S&P last year. People are really oblivious to that fact unless you're with us and or others that are in this industry and realize you made really some very good gains last year. So what I would do if I do cut it back is I would say everybody that is a member as of March 1st, 2020 still can write 2 questions per month. That's what I promised you. But anyone that joins after March 1st, I'm just making this up. I'm not saying I'm doing this, but I may have to do something like this. Can only ask 1 question, or you can't, or something. you're a mastermind member, it's unlimited question, but there's not that many in the mastermind group. And bonuses, this is a book by Jerome Smith, The Coming Currency Collapse, taking silver off the exchange. It's the cheapest way to do it. The Gold Clause book is how to actually contract in gold and silver if you wish to do it. Harvesting green off the pinks. I don't emphasize this enough. How to buy penny stocks and not get burned. This is very, very, very important, especially if you run your own account. That is probably worth hundreds of dollars by itself if you're not familiar with these small cap stocks like green and silver that I just outlined. And of course, you can phone in if you want. That's the number of our technical support customer service office right there at 480-325-0230. Or you can choose an option to either pay $50 a month, or you can save 20% by paying in full, the full, $500 a year, and that saves you really 20%. $50 a month is $600 a year. You spend $500 a year, you're going to get the year, and it's actually a little easier to do, but it's up to you, of course. We have many people that buy it on a monthly basis. So I think that may help you. Let me go back. This stock here is one that's a speculation. You can read that and watch the video. You just click this and you'll see the video. I do highly recommend you just put your first name in here, and then you give us an email here, and then you hit join our free letter, and then you will get a message from us, and you'll have to verify it's you. We do a double opt-in to make sure we don't get any web bots or that kind of nonsense. So Anna, this is a little bit about this e-waste situation. By the way, and I know this is going to sound hypey, I know it's going to sound like hyperbole, but it's true. In my 40 years, I've never seen a speculation I like better than this one, and it's really a technology stock. This is a extremely high-grade gold mine. That's how much gold you get per ton. A ton is how many concrete bags you can put in the back of a normal pickup truck. That gives you the idea of the amount of rock that a ton is. And out of that amount of rock, you're going to get this itty bitty amount of gold out of it. And that's a working mine. That's a mine that makes a profit. You get in that same amount of waste, which is basically ground plastic circuit boards, you'll get that much gold. So if you want a gold investment that's really going to kick it, and I own the stock, I'm prejudiced, I love this company. No one knows about it except for the Morgan Report readers and a few very small cap, very small following newsletter people. The main people haven't caught on to it. You say, well, what about Eric Sprott and Rick Rule? And I don't have an answer. They know about it. Since they didn't discover it, maybe they've got an ego involved or not. I don't know. What I do know is that Rick certainly knows about it. Eric knows about it. And my guess is, since it wasn't them that found it, they just don't care. But I don't really know. I'm guessing. That's my interesting point of view. And I know most out of time. So here's what I like to show you, and I'll sign off and thank you everyone for your attention. The top pictures are from a top quality gold mine with a yield of about $400 per ton. And that's what you want. You want, hundreds of dollars per ton to be viable, to have a going concern. Compared to the output of our speculative company at $38,500 per ton, we know it's hard to believe. We know it's too good to be true, but it is. And that's why we want to get you involved. So again, if you want to join the report, you do click that, or you go to the subscribe button, and there's that. So Anna, please take me out. Thank you everyone for your attention. Several ways to contact us I've already outlined. When in doubt, just go to themorganreport.com, and there's a contact button on the website.
Much. Okay, guys, so that is really what I want to talk to you guys about today. We've, the news is so important, right? It actually can subliminally brainwash you, because if you have the news on in the background and they say, oh, this market's going to continue. This is the best ever. We're coming into earnings season. This is going to be amazing. Well, you know what? That might not always be true. There might be some ulterior motives there. And I'll just go ahead and get into the legal disclaimer. You know, everything that you see here is for educational purposes. Trading any sort of securities instrument does come with high degrees of and varying degrees of risk. And if you guys are learning a new method with trading, I highly recommend that you go ahead and paper trade for 6 months. If you are not able to go ahead and prove it on paper that you are going to be profitable with a strategy, it really would not be in your best interest to move forward with real capital. So if you are starting out, or if you are changing over to maybe a new strategy that you are learning from somebody else, then please, please, please paper trade, because the market will be happy to take your money. All right, so a little bit more about myself and where you can find me, more about where you can find me. I'm pretty much everywhere as Airplane Jane. I am a licensed pilot, and I did work in the airline industry, which the whole airline sector is loving oil today and doing really well. So you can reach me on Twitter, Instagram, YouTube, LinkedIn, email. I also work as an educator with the Stock Whisperer Trading Company and in the training pits. And as a female trader, when I was first starting out, I was really looking for a book to educate me about other female traders in the industry, not Susie Orman or these big financial planners, you know, somebody who's really day trading, because I am a day trader and a swing trader. And there wasn't a book that I found, so I went ahead and I created one. And it's written much like in the style of Market Wizards or Momo Traders. And it is an interview style book about female traders from 5 months of experience to 25 plus years. And I actually won 2 awards for it as well. So how I actually really came to the trading world was originally, you know, at the breakfast table, way back before internet was really this accessible as it is nowadays. You know, my parents would sit at the breakfast table reading their Wall Street Journal, and I got curious and I started saying, what's this high and what's this low and what's this PE and, you know, what's a dividend? And I was starting to learn about stocks from an investment value fundamental standpoint. And so after college, I ended up going from a banking job over to being a broker's assistant for 4 different brokers. And I went through and I got my Series 7 license to go ahead and be able to trade with other people's money. And I was in the office and back in 2000 when the dot-com bubble was happening and WorldCom went boom. And I saw devastation happen to these clients that were part of the WorldCom office, to the employees that had taken out money and margin against their options and they never exercised them. So I thought, you know what, I really do not want to work with other people's money in the stock brokerage world. So I left, I went off to culinary school in Europe, and then later, after immigrating to Canada, I found myself pregnant and I was laid off at 8 months pregnant. And I thought, man, what am I going to do, right? So I ended up turning back to trading after my husband had said, hey, you know what, you had a great trade. You turned 25 into 250,000. Maybe you look at that. So sure enough, I did, and I started doing self-study and really fell in love with trading. I love numbers, fell in love with the charts, and really the pulse of the market. And so I started out being a scalper and then more of an intraday trader. And now I do even more swing trading because I see that there's a lot of value, like Mr. Morgan was talking about swing trading, that long-term position holding. It can be very, very profitable. Over the past year, the 30% of the S&P. And if you're doing intraday trading, it's just that small range that you get throughout the day. Whereas swing trading, as long as you're in that trend, you can still be fairly profitable over the long term. So what about all this breaking news, right? We've never had so many tweets from a president. And a lot of this news can really drive you crazy if you're sitting there and you are listening to all of it, right? Because let's see, if you guys have any questions, just pop it up. I'm not sure if I can see them all, but go ahead and shoot them away. So right now, it's like, what is going on? What is going on with all this craziness with the news? We've got the coronavirus, we've got the trade deal, we have the impeachment. There's always something going on. Well, have you ever noticed that when you're listening to these news channels, that they are there and they're saying, hey, this moved because, this moved because. Very rarely are they saying this is going to be what's going to happen to this stock, or they're giving you really the highlights of which ones to watch. All right. So, you know, have you ever noticed that if you are watching a stock and you're like, yes, stock just got upgraded, sure enough, it pops up that day and then boom, big sell-off, or vice versa. You have a stock that's been downgraded and then it hits a peak or hits a support area, and it's starting to just plateau there, and then it goes and it takes off again. You know, many times the exact opposite will happen with these recommendations, and sometimes it could be the big analysts from these big companies, you know, the big brokerage houses that are saying, hey, let's go ahead and sell, for example, Facebook. I'm going to upgrade it. Let's give it an upgrade today, and we're going to be able to go ahead and get out of our position because we're going to go ahead and plant the seed in everybody's ear. Hey, go ahead and buy Facebook. It's going up, or vice versa. And is this bull market really going to go on forever, right? Oh, this is the melt up that we're going to have. This is going to be crazy. Everybody's short and we're going to melt up. Or is this the beginning of the recession? So you'll find yourself in this cycle many times, right, as a buyer, but this happens with the market as well, right? You're optimistic, you get into a trade, there's excitement, there's the thrill of it. Yes, I'm so smart. Look at this stock, it's going up. I can't believe it. And then you hit the euphoria. I actually just did a blog post about this this weekend at cjandtrade.com. You know, are we at a point of euphoria in the market? Have we hit this point that everybody's saying this market's going to go on forever? This is amazing. You need to get in. Don't miss out. You just missed 30% this past year. Don't miss out on the market. Well, we might just be right here, and I will start to show you why. And then, of course, you know, this was the despondency point. This was like back in Christmas of 2018. If you look at the news headlines of the 24th, oh, this market's not going, you know, the bull market's done, right? And then what happened? Right on up the hill we went, back over here, right? So at this point, leaning more towards the euphoria stage right now than the just going up the hill. And I'll show you why. So we have the headlines from December 24th. 2018 from Barron's. This was Christmas Eve. This was the absolute worst sell-off of 2018, the biggest drop of the year. Meanwhile, the Nasdaq's party is over for now, right? So they're saying it's not looking good. Nothing is looking good, right? And then we have this one this week. Barron's, Dow is going to 30,000. Why stocks could vault past this milestone, right? The market's a big run. Well, let me tell you a little bit more about the dark pools. I've been following the dark pools since 2017 now. And it all came about once I was writing my book and I encountered Stephanie Cameron, who's been trading for over 25 years. And she started following the dark pools through the Instinet machine. So the dark pools were established back in 1979, and it was a place for the large brokerage houses or anybody that wanted to place a really big trade. They had the ability to go ahead and put their order in. So say if you wanted to buy 1 million shares of Facebook, if you had that buy order in and it was sitting there on the books on the level 2, it would really scare people away from selling, right? So they wouldn't be able to actually fill their order at a price that they would want. So there was the dark pool where they could go ahead and they could put their big orders out there. It was hidden in the dark, and they would get amazing fills and lower commissions when commissions were really an issue. And then they would have up to 3 hours to report their trade. However, they figured out a little trick. Okay, well, maybe if we route it through a foreign desk, we can delay that reporting for 24 hours. So sure enough, it went on the Instinet machine, which is now on the books. You can see it. You can see all the orders on the books. However, these prints of these large trades are still coming through. And when you follow these really big guys, it's pretty easy to be profitable. So let me show you a little bit more. So those headlines, right? We had the headlines of the 24th of December right here, right? And what happened after that? 30%, right? We just had those headlines that this market's gonna melt up, basically. This is going to continue. We're gonna surpass this milestone right here, right at the top, right? Well, what happened on December 24th? We had 12.2 million prints on the S&P 500 ETF, the SPY, right? So we had 12.2 million on the 24th when that headline was coming out saying the NASDAQ bull run is over. On the 26th, we had an additional 26 million, right? So we're looking at 39.1 million. And when we go back, what happened? That was the bottom, right? All those, this was the 26th, excuse me, this was the 26th right here. This is the 24th. So the 26th happened, 24th happened, 26th, off to the races, right? Never looked back, never came back down to this level. Well, we're up here now, right? And let's skip forward a little bit. So we find these prints at Charles Schwab, Street Smart Edge. With the TD merger, there might be a change. Not sure about that. But we go ahead and we see these massive prints coming through, right? And we see them, and then we see the moves that happen, just like from December 24th all the way up until now. A nice, good year run, right? So we had these back of last year. Gold. Many times, if you also look at the seasonality of gold, you'll see the absolute beginning of January, it peaks for a little bit, drops down, middle of the month to the third week of the month, we start to get more gold prints, and then it rips all the way up through the end of February as a seasonality. Well, here we started seeing lots of prints on gold, and we're like, okay, there's something that's going to happen with gold. And we kept seeing them, and we kept seeing them. I mean, we started seeing them. Look, we saw them. This is a file that we have, but we saw these from January 23rd all the way through May 8th of 2019. So they were laying their position in this nice little channel range right here, right? And then all of a sudden, once it broke above, boom, up, right? And they had all this time that they were buying in and back up again. A little bit of a bull flag, and then up again. GDX prints, same thing. You know, Mr. Morgan was talking about the silver. We've seen a lot of silver prints too. So yes, silver looks like it could have that major move coming again. GDX, big position again for about 6 months, and then up, pull back, and then we're a bit of an upswing again. We have TLT, right? So TLT is here. We have this massive print and large prints coming in, and then way back up again. So what is really, really pertinent today? So I went through, we were talking about December of 2018. And so December of 2018, we started seeing those big prints. This is the past 3 trading days prior to today, right? So Friday, January 17th, we had 21 million shares in prints, right? And that was a range of 30, we have 30.79 to 31.79, right? So we have a nice dollar range, and it's 21 million shares. Chump change, right? 21 million times 330,000. I got that in my pocket. Then on the 20th, again, we see lots of big prints. 18.3 million shares of prints, right? And that price range from 331.02 to 332.15. Okay, so another dollar range there for that 18 million. Now you might be saying, Jane, you know, we see so many prints on the SPY. There's so much that's traded every day, which that's true. There is a lot that's traded every day. This is the most heavily traded ETF around the world. The US markets have the largest market cap of any market around the globe. So why would you be surprised that you're seeing this? And then 11 million January 21st, yesterday. At 332.66 was the high, and the low of 331.99, the close from the prior day. Well, this is why it's really strategic and important that we're seeing all of these prints. We happen to be at a top right now. And you know what? This happens to be more than we saw in buying, right? This is the total number of prints that we've had today up until 12:30. I wanted to keep it super relevant, right? So you look back and you're like, okay, now this is significant, right? How much have we had today so far? These are opening prints right here. So that's 236,000, 270, 80, 300,000 shares versus 51 million over the past 3 days. So this is significant. This is something that we watch and we are keeping our eyes on, because when we see massive prints like this, there is a massive move that will come. Now, is this move going to be one that is going to be ripping higher or ripping lower? We don't know. However, we also saw prints coming in on the fear index. We saw prints coming in on gold. We saw prints coming in on oil. Potential transfer of wealth around the market. You know, these guys, this is going to be $16.9 billion. It's a $16.9 billion position. So somebody knows something somewhere. I don't have any insider information. However, I can see that there's going to be a big move. I can see that there's going to be a major move in this market. Now, everybody's saying, oh, they've been talking about the impending recession, Now, all of a sudden, Barron's has flipped all of a sudden and saying, okay, this bull market can't stop. This is going to go on forever. We're in that potential euphoria stage, right, of the market, where this could actually turn into something massive to the downside. And it might have just started 3 days ago. And it's not that I wish this to be the top or anything like that. It's just significant prints of which we are going to follow. And learning how to follow these prints can be amazingly profitable, because you can see that when you're dealing with a $16.9 billion position, do you want to be on the wrong side of that trade? I mean, if you're going in with a new trade or going in with options on a small position, it could easily get burned, right? And so knowing about where these big guys are putting their money, where they're taking their money out, where they're putting their money, what they're putting it into, by seeing these prints come across, right? We happen to see prints on the SPY. We happen to see prints on TLT, for example, as well. We happen to see prints on GOLD, Barrick Gold. Now, is it a coincidence that all these headlines are coming out and the news is saying this bull market can't stop? Because they might want to be putting in the idea of into people's brains, hey, you know, we want to hype everybody up. Those lawyers, those doctors out there that want to get into the market, they missed out on this 30% increase. And we want to go ahead and we want to encourage them to go ahead and buy, because if we can get them to buy, that means we can sell. Because when you have a large trade that's going to be 1 million shares, let's go back to the prints here for a second. When you have a large trade, the biggest one I think was 2.87 million shares. There's always somebody on the other side of that trade. So if this is happening in the dark pool, you've got the big giant whale with all the money, and you've got all these little guppies on the other side. And that whale is going to dominate the market. They can change the direction of the water. They can do whatever they want with their strength. Whereas the small retail traders and the little investors were peanuts compared to these big guys with all $16 million, right? Excuse me, $1 billion. You don't want to find yourself on the wrong side of that trade. You know, whether it's a long-term investment and you start to see something, it's like when Facebook had its face plant, right? We saw prints coming out. When the drones were coming and attacking, you know, the drone incidents with oil, we saw prints on oil a week before. What happened? Boom, we saw the reaction come. You know, and we started to see these prints last Friday, and we're like, uh-oh, hey, hold on, this is a pretty nice amount up here. Maybe we need to pay attention to this. And then a second day, and then a third day, and now our fourth day, maybe they're done. And where are we going from here, right? What is going to, where are we potentially going? We've hit this top, right? This was back on the 17th, 20th, 21st, and today. And we haven't plummeted down, you know, obviously, if this is a correction, or even more, if this is a recession, and they've taken this time, you can also see in the candlesticks too, you know, a consolidation of 3 days, whereas we really haven't had that consolidation going up. We had a bit of consolidation back here in the middle of December, but really since then we haven't had a large consolidation time. And this was trading up on air, right, away from the averages. This black line is the VWAP right here, and this is the 4 EMA and the 8 EMA. So we're starting to see, okay, the volume weighted average price has dropped over the averages. We see that we're now trading below the 4 EMA. We touched the 8 EMA today. However, the end of the day could really signify where we are going to go from here. Are we going to go ahead and close up higher than where we closed yesterday? Or are we going to go ahead and continue to the downward side? So seeing all of this and putting the puzzle pieces together, we happen to be at a top, right? We just happen to be hitting all-time market highs. We happen to be seeing 51 million prints, you know, shares being printed of trades that have happened in the dark pool. And we're seeing headlines that are saying this bull market can't stop. Yet, if you go back to December, they were still talking about this debt bubble that's going to implode the economy, and how we're going to go ahead and we're going to have all these negatives happen. That's why Trump was so frustrated with the Fed, because they weren't cutting rates, they weren't cutting, because he wanted the market, well, in my opinion, you know, he wanted to have that go ahead and spur the market up. Now, where are they talking about the rates? You know, is anybody talking about negativity, like dropping the rates because the market's doing so poorly? No, they're talking about how this is going to continue going up, right? And all these subliminal messages get stuck into your brain, and then you say, oh yeah, you know what, this market really is going to go up. Do you know how often I actually have the news on when I'm trading? I don't use it. I'm using the prints, I'm using the technical chart, and I'm looking and trading it with gray candlesticks so that I don't even get caught up with my mind with red and green. Because if this was red and green, then it's going to really mess with my brain. Oh, look, it's a green candlestick. Oh, it was going up, right? But if it's just strictly, it's like black and white. If you're just seeing the actual technicals of it, and you have the prints, and you know, all right, look, we have prints, big, massive prints right up here, and volume is dropping off, right? These super high volume days, they were the top of the market. And now it's been dropping off a little bit. You know, where are we going to go? Or we could potentially test 327.66 here. We could test 326, and then we've got this trend line, and we've got some more speed bumps right here at 323. You know, we could have a nice big move, you know, maybe down to the 50 SMA, and then we bounce. That could be a bit of a correction. You know, it's about 20 points, not even 10%. So we might have a little sizable correction, but the fact that we've had 51 million and we haven't seen that since December 24th, it could really be more than just a little correction. This could start a recession right here for the market based on the size of the position. That's it. You know, and it's really paying attention and looking back to prior levels. So you might say, how do you trade this, right? So the dark pool print happens, and then we try to keep it fairly simple, right? Bullish above the level and bearish below. So if it's bullish above, you buy the stock and you go long, or you could buy call options, or you could buy a vertical call spread. You know, there's options have options on how you want to go ahead and trade them. And if you're already in the position, you know, you could sell against it, all that sort of stuff. If it goes below the dark pool level, we go bearish. We go ahead and we sell the stock and go short, or we're going to go ahead and we're going to buy puts. And we aim for the target, right? We have our targets that we map out with the trades, whether it's longer term swings or whether it's intraday day trading. And we go ahead and we have seen time and time again that certain levels perform, certain moving averages perform with computers that are programmed to buy and sell off of them. Also, other indicators on the chart that we use to look at for certain levels. And when these guys are dealing with billions of dollars, right, wouldn't you want to be working with them instead of working against them? Because these guys are the ones that can move the market, right? And so if you have that ability to work with them, and you don't have to have a hedge fund or the capital of a hedge fund, you can easily do it yourself in a trading community, or even learn by yourself. So for absolute newbie traders that are just coming into the trading world, or if you want to reset your trading to learn about the dark pool and trade around the dark pool, we have the training pit, which is a trading room, more of a training room, where we really help teach people all about how to set up the charts. You know, for some people that are brand new to investing or want to take control of their own 401k, they might not understand what a chart is. They might not understand, they know the concept of a stock too, but they might not actually understand the history of it and why it's important, or who the SEC is. So we try not to take anything for granted in this room and really help people understand their foundation first, right? If you have a pyramid or if you're building a house, you need that solid foundation at the bottom before you can go any further. And that's exactly what this is. Or you can do self-study with the prints. There's a dark pool app, the Stock Whisperer app. It's going through updates right now. So actually everything is free on Twitter. If you go to the Stock Whisperer, just follow Stephanie at the Stock Whisperer. Actually, she's the Stock Princess, Stock Princess, PRINTCESS. And you can see the prints as they're coming out. She'll go ahead and put it out there publicly for people. Not everything goes out there. We do have also, if you want that super intense training, I forgot to get rid of the October 28th. The next one is coming up for the boot camp for dark pool, where it's 70 hours now instead of 50 hours of being able to learn and be there all day, watch the market, see the prints come in, learn the timing of when to get into a trade, when to get out of a trade, why you should enter a trade, what are you looking for these trades. And you know, if you talk to her, actually, if you mention that you heard it from me, you can get some extra time in the Java pit. So the Java pit is really the advanced area where I'm in that room as well. And we really work together as teams, because when people are when you have 300 sets of eyes and we're all watching the stock market, we're watching these prints, we're watching the different levels that I was talking about for the bullish above or the bearish below levels, we all work together to see each other profit. There's so much money in the stock market that we can all work together and we can all help each other profit. And that's why I was telling you guys about these prints, right? Because not everybody knows that 51 million shares of the SPY were traded over the past 3 days. That's not being put out over the news headlines. That's not being put out on CNBC. Hey, watch out for this. No, they're talking about the bull market, right? Because they're still up. Maybe they're not done selling. They might take a pause for today, and then tomorrow is going to be the big, massive move. And everybody's going to panic. Stocks are going to be taken out. And that's what, it's going to drop the market. They wouldn't be saying this out on the public news channels, because then it's going to create intense fear and people will probably exit their positions overnight. Or you can get into puts, or you could go short, or there's so many different ways to be able to also protect your positions. If you're in long-term positions, you could potentially buy some puts on those positions or sell some calls against them. There's lots of different strategies to be able to go ahead and protect your longer term portfolio while being able to see these prints and be prepared. The bottom line is you want to be prepared for a massive move. They've been talking about this since December of 2018, right? The market was going to go down, and now all of a sudden they switched their tune to, hey, this market's going to continue forever. No, to me, that doesn't make that much sense, that all of a sudden they've switched their tune and they're saying this market's going to go up forever. And then we see 51 million shares being printed. So if you guys really want to learn about it, please check it out. You're welcome to email me at jane@thedarkpools.com or stephanie@thestockwhisperer.com as well. And I also do my own watch list every day that I'm also trading, and I'm watching as well, watching different levels. And it's really a lot of the big movers for that day, the gappers, also looking at the dark pool where they might have put a print in, and it might be significant for that reason, or it could be that I'm seeing other signals in the market that might have a big move, like Facebook over the next 2 days is probably going to have a big move to it. And right now we're in the downish trend, so that might be a really big one to watch. The gold sector, GDX, NEM, Nugget, those are going to be some that are going to have some big moves, as well as Adobe. So you can watch back, look at those stocks over the next couple of days, see if these big moves happen. There's signs that we see that the moves are going to come. Looks like there's a question. Hold on. Click to see the question. Trader. Sorry, guys. I don't know how to get to the questions very well here. Somebody raised their hand. Is there any question there? Or no, it's just the chat. I can see the chat now. Okay. And if you guys want to, if you guys are interested in signing up for my watch list, you can go and use Investor and you'll receive 20% off of the watch list. It's really affordable. It's less than $1 a day pretty much with the 20% off. And you're going to get 10 stocks that are going to be volatile for the day, that are going to have big movement. They've had large movements and there's potentially more movement to come. Daily short percentage, that's something that I really watch for the up gappers for the day, like STM today. STM had 72% daily short volume, meaning the volume from the day prior was 72% short reported to FINRA. So it was roughly 1.7 million. At the time that the market opened, it still hadn't had 1.7 million that had been traded. So I'm going to go ahead and watch that. And if it starts to go ahead and press up and it's going to go ahead and break that resistance, that bullish above level in my head of 30.50, then that's going to be a pretty big indication that that could really run until that 1.7 million has been covered, right? Because if we're getting all these short squeezes, started to see Tesla had over 65 days of more than 50% short volume. Finally, the past 3 days, it has been less than 50%. We had a major hedge fund that got burned because of being stubborn with their Tesla position, and their ego took over. Instead of saying, they probably were adding to their position and adding and adding and adding. And in the end, when you see a $300 stock double in less than 6 months, there's some reason behind it. Initially, Musk had his tweeting abilities taken away, so he was leaking emails. Then it started going the right direction, and then the shorts just started to get squeezed, and it kept happening, and it kept happening, and kept happening, until finally a major hedge fund got taken out. It hit $600, and it had doubled, and people were just like, what? How did this happen? It was a major short squeeze with 133 million shares in the stock, and it was one of the most heavily shorted stocks out there. Does anybody have any questions? I'm not sure that I can figure out. Anna, I'm sorry, I'm not technical with this.
Sure, we had you have 2 questions from member. When does your watch list comes out?
So my watch list I do right on my website. And when you subscribe, you go ahead and you get access to my website. I am a mom of 2, so I usually sit down at my desk at 8 o'clock in the morning. I'm checking what's volatile. Roughly by 8:30, I go ahead and I put this out without these support and resistance numbers in it. So you would see them float, and you would see the daily short percentage volume. And then by 9 o'clock, I have everything done, and I also have photos of the let me see if I can go ahead and pull it up really quickly for you. That I go ahead and I have photos of the charts as well. So you can go ahead and see everything all in, I'm just waiting while I pull that up really quickly. You can see it in here. Let me pull it over here. All right, so should take us right there. Logged in still. There you go. So this is what you would get. So you're going to get the date. You're going to get what's, oh, I misspelled it down with IWM. You're also going to get the global announcements. So today at 11:30 on Thursdays is going to be the natural gas announcement. If you have anything else that's going on, unemployment claims, 9:30, you have that. You also have the chart as well, broken down. And usually these are going to be a bit bigger, so you can look at it. You can also open it up, and you can see, all right, these white lines are going to be the volume profile from the prior days. So you can see that that was a resistance. It broke up above it, and then it flipped to be support. So right now, for Johnson & Johnson, it was on my list, right? So you can see my bearish below level was 148.19 and 149.19. And on Wednesday, the point of control, or the volume profile point of control, was actually 148.32. So you can see it right there in live action, and you can check it out. And was there another question, Anna?
Next question would be, is the list provided pre-market or during the day?
No, it's available pre-market by 9 o'clock. Thank you, Anna. Thank you for having me back again.